From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your green in brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
Concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube size concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-Concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-Concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing E-Concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-Concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call it biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-Concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, E-Concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. We've got the S&P, NASDAQ both higher, the Dow lower, stocks little changed after the S&P's biggest two-day rally in more than a year. Right now, the S&P is up 5 points, up 0.1%. The Dow is slumping 50 points, down 0.1%. NASDAQ higher by 71, up 0.5%. The NASDAQ 100 index up now by 0.2%. With stocks back close to records after the recent swoon, what about complacency in financial markets surrounding the Omicron variant? Kate Faddis is President and Chief Investment Officer of Grace Capital.
I don't think the markets are being too complacent. I think the markets are looking to the data. And currently, it's hard to know exactly what's going on. You saw the market reacted initially when we heard about it, but now you're hearing it's kind of mild. You're hearing that if you're inoculated, it's not so much of a problem. So I think the market is looking carefully at the information. If the market gets some truly specific data, it will react.
The 10-year down 12.30 seconds, 10-year yield 1.51%. Gold, little changed, up 48 cents, 17.84 the ounce. West Texas Intermediate crude up 1% right now, 72.74 a barrel. Pfizer and its German partner BioNTech say initial lab studies show a third dose of their COVID-19 vaccine may be needed to neutralize the Omicron variant, results that will accelerate booster shot drives around the world. Pfizer shares down 0.8%. Its German partner, its ADRs, lower now, BioNTech lower now by 2.7%. Jefferies Financial Group is asking staffers to work from home after the Wall Street firm saw a rise in COVID cases among its workforce. The CEO, Rich Handler, in a memo said employees should consider working remotely for the rest of the month. Recapping S&P, up 6 now, up 0.1. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Take's Tim Stenovic on Bloomberg Radio.
Good afternoon, everyone. It is Wednesday, December 8th, 2021. Carol Masser along with Tim Stenovic, live in our Interactive Broker studio, streaming on YouTube. Wait, what? Where are the big swings? Where's the volatility?
That was so yesterday.
Oh, my God.
And so last week.
Talk about fads. I really feel like stocks are taking a big break, maybe before that inflation read on Friday and really ahead of that FOMC meeting. But we'll have to wait and see what tomorrow brings.
Yeah, we certainly will. Hey, how are you feeling about lying flat these days?
I'm here at work. That's all I'm going to say.
So am I. What's the Bloomberg Big Take? Also the most read on the Bloomberg Terminal today. It's in the upcoming issue of Bloomberg Business Week magazine. It may turn out to be one of the big pivots in our world. From the Great Resignation to lying flat workers, they are opting out. A deep dive into what's going on, not just in the United States, but around the world.
Yeah, totally. We're going to talk to David Rubenstein about that and his book, The American Experiment. Also his interview with the head of Hilton Worldwide. Steve Case is with us, Chairman and CEO of Revolution. Also David Lee of App Harvest. I actually caught up with them for the Bloomberg Sustainable Business Summit, so we'll find out what he has to say. Both of them have to say about working together and about really, truly building a sustainable business. That's the upcoming edition of Business Week.
Bloomberg Business Week is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more.
All right, folks, let's get to the Market Drivers Report. Let's set that Business Week agenda on the, it's Wednesday, hump day. It is here. Kriti Gupta is also here, Bloomberg Markets correspondent at Bloomberg News in our Interactive Broker studio, along with the wearing some animal print today, Katie Greifeld. She is Bloomberg News cross-asset reporter, Bloomberg Quick Take co-anchor at Interactive Broker studio here, both of them. I always think a little bit of animal print is a good thing. I don't know how you feel about that, Tim, but...
Yeah, sure.
I need it today. Come on.
I always do. All right, Kriti, kick it off for us. It does feel like a little bit of a more subdued trade here today.
Yeah, a little bit of quiet trading. We'll see if people are actually just asleep at the wheel. I think a lot of this is waiting for CPI data on Friday. A little bit of jobless claims data for tomorrow, but really the third day of gains for the S&P 500 was a good chunk of it can be attributed to Apple in particular, which is just driving the train right now. Best 3-day rally since January. You are seeing it near its $3 trillion market
Isn't
cap.
that like, okay, Apple is that company that doesn't matter whatever I feel like, whatever metric, whatever number, it's just massive.
Yeah, it's like kind of that kid in school who always overachieved no matter what. Yeah, it's like really annoying.
To keep that analogy going, where is that kid in college yet? I feel like this kid's getting a PhD at this point.
It's third PhD, perhaps.
True. PhD, Nobel Prize, whatever.
Exactly.
But regardless, that's Apple for you. And this is coming, of course, after we've talked about them dealing with those kind of demand delays, dealing with supply chain issues. And now, today's rally is on the Nikkei report that says they spoke to their suppliers, said to amp up some of their production from November all the way to January. So kind of in
Tim
that
bought,
holiday season.
2 new phones.
Yeah, 2 new phones.
Well, they have to replenish their inventory after Tim's purchase.
Well, inadvertently paying full price, but that's a completely different story.
Still, you haven't worked that out?
It'll happen. Just a few hours on customer service.
He looks tired. I wonder if he was up till midnight again.
Yeah, well, so Apple leading the game, so that's what you need to know.
Hey, Katie Greifeld, what are you keeping an eye on?
I'm all about crypto today.
Yeah, because of what's going on in the house?
Absolutely.
Is that your crypto shirt?
This is my crypto shirt. Yeah, I wear cheetah for crypto. And I mean, the price of Bitcoin, it's similar to the S&P 500. Not too interesting, even though
it's a snooze fest.
It's a snooze fest. But Tim, look at Ether, the second largest cryptocurrency, up 2.5%. Not a huge move in the grand scheme of life, but it is a continuation of this trend we've been seeing of Ether outperforming Bitcoin. You saw in that flash crash that we saw over the weekend, Bitcoin bore the brunt of the selling. It hasn't been able to recover as quickly as Ether has, which hasn't sold off as much since that fateful Saturday.
I do wonder if there's going to be at some point some kind of, really parsing through all of the cryptocurrencies are out there, but even among the leaders between Ether and Bitcoin, like, do we start to kind of look at them differently?
It's interesting, because cryptocurrencies, all of them, there's so many, 12,000. I heard that stat earlier today. Then they tended to trade as a block, at least the big ones. But now you're actually seeing some breaking apart. Bitcoin has really become this macro asset. It responds to cues from the Federal Reserve, inflation, those sort of data points that stocks and bonds respond to, whereas Ether, it's more about the blockchain, it's about DeFi, it's about NFTs. So you are seeing some dispersion in what these coins really take their cues from, which is a sign of maturation of the asset class, I would say.
Exactly. I agree that. A legitimization, right? We're increasingly seeing. Hey, Creedy, what about the travel industry? I mean, that has also taken off big time today.
Yeah, it has. I think your best 3 gainers today are your cruise lines, all 3 cruise lines. But remember, they're also a volatility play. I think a lot of people say, well, got some news. Well, I'll explain. I got some news out of BioNTech and Pfizer here. Therefore, that means that the travel is safe again, and that's true to some extent. But remember, if you are betting on a higher volatility environment, the best places to do that are your airlines and are your cruise lines, and that's the legacy of 2020 because they moved positive, negative territory so much, and they fluctuated so much. They've kind of had this legacy that if you wanted to kind of make a trade that really centered around volatility, there's ways you can do it through the options market, through the VIX curve. You can also do it through some of these players.
Some great movement on these guys, right?
Yeah.
And great for traders.
Right, exactly.
I'm ready to get tickets to go somewhere.
Tim's like fundamentals. Let me just get on a plane.
Are you guys cruise people?
No,
boat people?
I'm not.
I'm boat people, but I'm not a cruise person.
I'm terrified of boats. I
fear the ocean, I would say. Large bodies of water.
I've heard you say that before.
Yeah, I don't know. Something inherently in me. I don't like it. The air is fine, though.
It's like the most calming to be out there in the middle of the ocean.
You're so alone.
No, that's what's kind of nice. Love you guys, but just going to say. All right, Creedy's going to be back a little bit later on to talk more about the market. She's Bloomberg Markets correspondent, and Katie Greifeld, fear of the ocean. Both of them, who knew, Bloomberg News cross-asset reporter and Quick Take co-anchor as well.
It's time for the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot. It's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
All right, here's a number for you, and today's number is $3.4 billion. Mark Zuckerberg and Priscilla Chan, they are married, will invest up to $3.4 billion to advance human health over the next 10 to 15 years. This is coming from the Associated Press. The Chan-Zuckerberg initiative's mission is to cure, prevent, or manage all disease by the end of the century.
She's a doctor. By training.
That's a huge mission.
It's a huge mission.
Like, how do you do that?
Long had an interest in public health, though.
Right.
They've donated a lot to local hospitals in the area.
And to, I believe, is it Harvard and their public health school?
I wouldn't be surprised. I don't know for sure.
Yeah.
But I know in the San Francisco Bay Area, they have been very active in that realm.
Yep. Harvard Chan School of Public Health. All right, let's get to World and National News. Nancy Lyons, take it away.
Thanks, Carol. Lab tests indicate a third dose of Pfizer-BioNTech vaccine neutralizes the Omicron variant. But Pfizer CEO Albert Bourla tells Bloomberg they will not likely know for sure until the end of the year after they've studied real cases.
What really I think will be the final verdict will be the real world data when we see what happens in the real world. If people that they have the 2 doses are protected, if people that they have the 3 doses are protected or not.
Bourla says their initial findings indicate a third dose increases neutralizing antibodies by 25-fold compared to just 2 doses. He says Pfizer and BioNTech are already working on an Omicron-specific vaccine that could be ready as early as March. The House and Senate are checking items off their year-end to-do list after forging an agreement yesterday on a plan to raise the debt limit. The Senate is likely to consider a bill to raise the debt ceiling tomorrow. The House passed the measure last night. Democrats would receive one-time fast-track authority to raise the debt ceiling without the threat of a filibuster. The bill might also defuse another time bomb, 10% in mandatory cuts to Medicare payments under both the Pay-As-You-Go law and the Budget Control Act that are set to go into effect on January 1st. That's something that's alarmed hospital and doctors groups. In Washington, I'm Amy Morris, Bloomberg Radio. President Biden says the U.S. and some of its NATO allies plan a meeting with Russia aimed at de-escalating tensions over Ukraine. He says he hopes to be able to announce something on Friday. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Master along with Tim Stanovic. This has certainly been a top of our most read. We've been talking about it in the newsroom. This has to do with the press secretary for UK Prime Minister Boris Johnson, because a video emerged showing a key aide joking about a party in Downing Street last Christmas at a time when such gatherings, we were all shutting down, trying to be careful, were banned. The video was obtained by ITV News and recorded 4 days after the alleged event. It shows the Prime Minister's then press secretary, Allegra Stratton, actually rehearsing for a TV media briefing, and listen to a little bit of this.
Anybody have any questions today?
Do you recognise those reports?
I went home. Hold on.
Would the Prime Minister condone having a Christmas?
What's the answer?
I don't know. It wasn't a party, it was cheese and wine. Just be clear, it's not.
Is cheese and wine all right?
No.
It was a business meeting.
I'm joking.
This is recorded. This fictional party was a business meeting. And it was not socially distanced.
Well, number 10 has spent the past week denying any rules were broken. What's interesting is Boris Johnson did apologize after that video emerged, showing his key aide, then Press Secretary Allegra Stratton, making those comments. Yeah, it's kind of, at first when I watched it, I thought, wait, was this an actual press conference? And then I realized what was going on. I mean, I kind of cringed a little bit.
What were they thinking?
Probably
this was the
not
UK.
Thinking.
Yeah, I mean, if we think back, also it was different in the United States, in the United Kingdom back then, about a year ago, right?
I mean, if you think about a year ago, right, we were shutting down again.
Especially in the UK.
Exactly. And it's interesting, too, because you had Boris Johnson holding a very lengthy press conference today again, pulling back, advising people to work from home again because those case counts, because of the Omicron variant, are rising again in the UK. It's interesting.
It is interesting. Hey, you got to be careful. There are people recording everywhere.
That is something. And as we can also remind everybody, exactly, rules are rules. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Equities are trading mixed. This update brought to you by SEI. Imagine your asset management firm's operational infrastructure as a competitive advantage. Let SEI show you how at SEIC.com/IMS. Equities are edging higher following the S&P's biggest two-day rally in more than a year, with the S&P little changed, up now by 1 point, up less than 0.1%. The Dow down 57 points, down 0.2%. The Nasdaq Composite Index up 41, up 0.3. The Nasdaq 100 Index is now flat on the day. 10-year yield 1.50%. 10 years down 9/30 seconds. Spot gold up 0.1%, 17.85 the ounce, while crude oil, West Texas Intermediate, up 0.7%, 72.56 a barrel, and Bitcoin virtually flat as well, up $12, 50,539, a gain there of less than 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the earliest studies in Omicron are giving cause for cautious optimism. We've certainly seen that play out in the financial market trade, the equity trade in particular. While vaccines may be less powerful against the new variant, protection can be fortified with boosters, and that's certainly something we're hearing from the companies. Pfizer and BioNTech saying initial lab studies showed a third dose of their COVID-19 vaccine neutralizes Omicron, results that will accelerate global booster drives in the U.S. I've certainly seen it as you try to sign up, that it's now you've got to wait a couple weeks to get that booster, and it's really picked up a lot of momentum. Wow. I've heard that from colleagues. I got mine on Monday, but I know...
Talk about a catalyst to get, butts over to shots.
People are noticing it in a big way. Well, back with us to talk about the latest day's headlines when it comes to the pandemic, Dr. Anthony Harris, WorkCare's Chief Innovation Officer and an Associate Medical Director of the on-site clinical operations for the company. WorkCare, if you're not familiar, they're a physician-directed occupational health services company. Dr. Harris also leads the company's COVID-19 clinical response team. He is back with us from Chicago, where they are based. Dr. Harris, nice to have you back with Tim and myself. How are you? How are things in Chicago when it comes to the pandemic?
Well, thank you, Carol. Thank you, Tim, for having me back. And things are okay. When I say okay, people aren't running around with their hair on fire here. But certainly we're seeing the effects of this Omicron scare, recently. And so we're seeing more mask compliance potentially. And certainly when we're talking about going to shows and whatnot, we're seeing more requirements that you have to be vaccinated to get in.
How much does that actually help people? Like, what is the thing that actually prompts people to get shots? The people who are sitting on the sidelines right now. Is it something like what Carol was talking about with people going to get boosters because of the Omicron? Or what's going to get someone to get the first shot?
Sure.
If you've held out this long, right?
Yeah. We saw early on, right, the early movers, kind of the third of the population, roughly, that had been fully vaccinated, go ahead and sign up to get their boosters. And if you look at the statistics now in the U.S., we're looking at under 30%, though, as of 2 weeks ago, received their boosters. And we saw an acceleration of that just last week with the scare of Omicron. I mean, we had one of the highest boosted days on record. I believe it was 2.7 million boosters administered in one 24-hour period, which, again, points back towards what motivates people to get boosters. Certainly fear is one of them, right? Psychologically, unfortunately, we know fear only lasts roughly about 2 weeks as a motivating factor. So the other factors, I believe, to a minor extent, are gaining access to different venues. So we'll see how it continues to play out. I think mandates, right, we've seen put in place increased booster participation, but I think we've already kind of topped out the effectiveness of that approach at this point.
Hey, I am curious, since the pandemic has started, and I think we're about 20 months or so in since the pandemic took hold in the U.S., depending on how you count it, but roughly so. How has your thinking and strategy evolved in terms of managing the pandemic, Dr. Harris?
Sure. It really is, going with classic public health approaches, right? And by far and away, the biggest approach is education, right? And educating the public in today's time, drastically different than educating the public back in smallpox time, right? And I'm just speaking anecdotally as a physician here in the U.S. When I started my career a decade ago, I would approach my patients and begin to educate, and I would have some good dialogue around what the best approach is. But certainly today, it's more of, hey, doc, here's what I've researched on my own. Guide me towards and navigate me towards the data so that I can make my best informed decision. Whereas days of antiquity was more so, hey, doc, you're the expert. I'm going to do what you recommend. So I think that dynamic we see playing out from a public health education standpoint, not a bad thing, right? We want people to be accountable for their own health and wellness. But with today's information and the prevalence of misinformation, it is perhaps becoming more difficult to do.
Hey, Dr. Harris, help us understand what expectations should be as far as booster shots go as we do, get to the other side. I use the term get to the other side of this pandemic, but it just seems like every few months there's a new variant that's not getting us to the other side. So I'm wondering, is it realistic for us to think that we're going to have to get a booster every 6 months or so?
Unfortunately, the estimate is yes. Right. We see waning of the booster after about 6 months, even now. Right. I know anecdotally, again, physician partners of mine that are planning to get their 4th shot. Right. So they've been fully vaccinated, received a booster, and they're already planning to get their next booster come early next year to keep their immunity level high. And the science behind that is straightforward. You have a building of immune antibodies and immune cells. These are called plasma cells that remember what the virus is, what it looks like, right? And those we know diminish over time, both antibodies and B cells to a lesser extent. But when we're talking about new variants, even if you have a decent level of antibodies against one type of virus, doesn't necessarily mean it's going to bind well to the new virus, i.e. Omicron, that has over 30 mutations in the binding site for our antibodies. So the basic science is the more antibodies you have in your system, the better off you are going to be in terms of faring against historic variants as well as new variants. Unfortunately, we know clearly antibody levels diminish over time.
Dr. Harris, 20 seconds left. How are you advising your team in terms of maybe where we will be in a year's time? Just quickly, please.
I always say plain and simple, follow the finances and the pharmaceuticals. They're estimating to ramp up their production, both Pfizer, Moderna, Merck, and all through 2022. So in a year's time, we're going to still be in the thick of things.
All right. Good to know, I guess. Dr. Anthony Harris, Chief Innovation Officer at WorkCare, on the phone from Chicago. You are listening to Bloomberg Business Week. Coming up next, our countdown to the close. We'll join our TV colleagues in just a moment, getting you ready for that close. That's just about 90 minutes away. This is Bloomberg Radio.
Connection lost.
countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
And about 89 minutes left to go in the trading day on this Wednesday afternoon. Romaine Bostic, Taylor Riggs, Nolly Bass again for Caroline Hyde. We're counting you down to the closing bell, and here to help take us all the way to that bell, Carol Master and Tim Stenovich, bringing together our Bloomberg television, radio, and YouTube audiences. And Carol, we're coming off what, of course, was the biggest two-day gain that we've seen on the S&P 500 all year long. A little bit of a breather today. A lot of headlines out there that I think are causing some people to just reassess just a little bit where we stand right now.
You're spot on, Romaine, because I do think also safe to say that we are taking that breather because we are going to wait for that Friday's read on inflation, right? That could be certainly pivotal in terms of some market direction, especially when we look at the Treasury trade or certainly the equity trade. The other thing is things are going to calm down until we get to next week's Fed meeting, the last of the year, but we're going to see what Jay Powell has to say about a lot of things, Tim.
Yeah, and of course, some mixed news about the virus and variants spreading around the world. You know, lockdown news coming from the UK and concerns about the spread there, but at the same time, some good news when it comes to vaccines here in the U.S.
Let's walk you through the majors here. You're looking at the Dow Jones Industrial Average, slightly lower in the day. You can basically call it a flat. This is roughly around the lows of the day. Similar story for the S&P 500. At one point, it did trade as high as 46.98, so it tried to make a run back towards that 4,700 level, but a relatively tight trading range there. The NASDAQ Composite and the NASDAQ 100 higher on the day. We don't have it on the screen, though. We should point out, though, the Russell 2000 is your outperformer on the day. It's up about 0.8% here. You're seeing a modest bid come in to some of the financial names, a few of the energy names as well, and a few of the consumer discretionary names holding up as well. Taylor?
Well, let's talk about the energy and the financials. That's what you mentioned, Romaine, here on a sector level as we are counting you down to the close. What's interesting is it is energy and financials that are just a little bit to the downside, followed by staples. That's the worst performer, off about 0.7%. Now, before this and yesterday really was a broader based biggest rally, but you are still seeing some gains as we go into the close. Healthcare, materials, industrials, that really feels, Carol, like that inflationary trade once again underway.
Yeah, exactly. And certainly something that's being talked about in the markets today. Let's go to some of the big movers when it comes to the S&P 500 today. And atop that list is Apple. I heard you guys certainly breaking it down. We just got that headline on Apple winning a reprieve in a court deadline to revamp its App Store rules. This is its battle and that broad challenge that's coming from Epic Games. We did see Apple pop on this news, 2.3% heading into the session. We've all been watching to see when that company becomes a $3 trillion market cap, because it's just phenomenal that the company continues to just grind higher and higher and higher in terms of its size. The other thing is we did have a report overnight about Nikkei and about suppliers saying, hey, or the company telling suppliers that we need you to pick up your momentum, and that was already giving a boost. But nonetheless, something big on the legal side there. Facebook also, we're seeing a pop there in terms of the trade and among our big movers in the index today. And what we're seeing there, only story I could see is that the company's saying that it's built an AI tool to really work on cutting back on harmful content within a week or so. So they're working on that. And then Tesla, we also saw that one, a big mover as well in today's trade. Some headlines, a variety of headlines having to do with our transportation officials watching that company as well. Concerns about, I guess, being able to play a video game while you're in the car.
Yeah.
I mean,
we're gonna talk about that on Bloomberg Radio with Dana Hull a little bit later. Hey, let's talk about the downside because Microsoft is pulling the S&P 500 lower. No clear catalyst here, but this is a $2.5 trillion company. So when it moves, either way, the index certainly moves. NVIDIA down more than 2%. No clear catalyst here, but NXP Semiconductor got a sell rating earlier in the day and from UBS saying that it expects growth at the automotive division at NXP. So that could be weighing on and it could be lower as a result. Home Depot down 1.7%. It did hit a record high yesterday. So a little bit of selling happening there. And Costco reporting earnings after the bell today. Bloomberg Intelligence saying there could be some market pressure. Those earnings coming after the bell on a Thursday. We'll keep an eye on those for you.
All right, so should we talk about what's going to happen in terms of will the Fed do something significant? We know we heard from Bill Dudley, right? Former Fed president of the New York Fed. He's a Bloomberg opinion columnist. He's also a scholar at Princeton. He had some thoughts to say about what he thinks the Fed is going to do next. Check it out, everybody.
I think what you're going to see is a higher inflation for 2022, a tighter labor market, and most importantly, much more tightening from the Fed in the forecast horizon, which extends from 2022 to 2024.
And the opinion there from Bloomberg opinion columnist Bill Dudley, of course. The question, though, here, Carol and Tim, is this: you get to this idea that the Fed is going to accelerate the pace of tightening and accelerate, or at least start the Fed tightening cycle with regards to rates sooner than maybe what the market had priced in a few months ago. But on the same day here, we're looking at the UK saying, okay, we got new lockdowns. You got Jeffrey saying we're going to push back the return to work. We got Denmark basically saying bars and nightclubs, Taylor. I know you're a big Denmark bars and nightclub fan. They're shutting it down, just shutting it down. So does this not factor into that December 15 meeting? Do they ignore this and just look at inflation?
I don't think that they're ignoring anything. I think they're taking it into account. But Schnelly, I would say that if you're thinking about letting inflation run a little bit hotter, maybe they have been thinking that they need to at least taper and accelerate that taper a little bit faster. I was reading one note from T.S. Lombard saying that maybe they are looking now at a March rate hike.
Did you print that note out?
I did. We can do some highlights here later. I don't think, Schnelly, they ignore it, but is the virus really that big of a concern if we not learn to live with it at this point?
Yeah, and it's so interesting because you had that initial testimony from Jerome Powell right after we really started to hear about the Omicron virus really picking up here. So the question is, how does it continue to impact the economy, supply chains, at a time where really these investment banks remain?
Did anyone listen to Jeff Gundlach's webcast yesterday?
Yes.
I mean, I disagree with him on probably 90% of what he says, but he actually made a really good point here about how hot the economy is. He kind of took a look at consumer spending, and it was an interesting argument, and he really made, I thought, a very passionate argument about how hot the economy is and how, even though you have these fears about Omicron and everything associated with that, the Fed has a job to do. It has a mandate that it has to fulfill, and this might be the time where it finally has to sort of step up to the plate and do it.
How many times in this conversation did we say question? Like, there's so many still questions out there, and I think that's what we're going to see, whether the Fed still feels like there's too many questions out there for them to get more aggressive, but we'll know more next week. All right, that's going to do it for the countdown to the close. Join us again. This team, we're going to count you down to the closing bell on this Wednesday. We'll do that at 4 p.m. Wall Street time, so join us then. Stay with us, too. You're listening to Bloomberg and watching Bloomberg.
This is Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Carol Massar, Tim Stenovic in our Interactive Brokers studio.
I got thoughts. I got some thoughts. I think Taylor made a good point. It's something that you and I have been talking about a lot when it comes to the way that the Fed perhaps, and even economists are thinking about the various headlines that we're seeing when it comes to the virus around the world. Yes, there are perhaps, restrictions coming in some parts of the world, but this is a time where we're learned how to, this is not March 2020. This isn't April 2020. We've learned how to live with this.
Yeah, as long as the variants are something we can manage. If we get to a variant that's a lot more problematic, I don't know. And you still have, look at what the UK is still doing. So people are probably, if they're maybe working from home, they're not going to go out maybe shopping. They're not going to go out to restaurants perhaps. And so what does that do to economic numbers? Maybe only the short term, but nonetheless, it reminds us that things can shut down.
All I can say, cruise line stocks.
Right, today.
Reopening stocks today.
Still down though, right?
Yeah, still down.
All right, let's get to world and national news. Yin, I am his yin to his yin, or her yang, or she, whatever. You know how it works, Nancy Lyons.
Anyway, Senate Majority Leader Chuck Schumer is criticizing Republican efforts to end President Biden's vaccine mandate on large businesses. And he's also criticizing those who are totally against vaccines in any situation. He says their objections are fueled by crazy conspiracies that remind him of days gone by.
Reminds me of what happened 400 years ago when people were clinging to the fact that the sun revolved around the earth, or 500 years ago when they were sure the earth was flat.
Schumer says people need to base their decisions on the science. Senate Minority Leader Mitch McConnell says he's against the president's vaccine mandate for large companies because he sees it as government overreach. The House January 6th committee is moving ahead with contempt proceedings against former White House Chief of Staff Mark Meadows. Bloomberg's Nathan Hager has more from Washington.
Committee Chairman Benny Thompson has sent a letter to Meadows' lawyer, George Terwilliger, saying there is no legitimate legal basis for his client to refuse to cooperate with the panel. Meadows was scheduled to give a closed-door deposition today. Meantime, the January 6th committee is set to hear tomorrow from Ali Alexander, one of the organizers of the Stop the Steal rally that came before the Capitol riot. The New York Times Times reports Alexander plans to tell lawmakers he had nothing to do with any violence or lawbreaking on January 6th. In Washington, I'm Nathan Hager, Bloomberg Radio.
Tiger Woods says this month he'll participate in his first golf tournament since his major car wreck 10 months ago. He says he and his son, Charlie, will play in the PNC tournament that begins December 18th in Orlando. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic. So, interesting story. Claire Ballantyne on the Bloomberg.
You can hear me laughing, right?
Is this a great resignation?
Well, we're going to be talking about the Great Resignation and sort of the lie flat movement in a few minutes. What we're talking about in Sachs, Claire Ballantyne writing that U.S. workers there are plotting early, or Goldman saying that U.S. workers are plotting early retirements. I'm laughing because they're listening to her comments yesterday about with the Magellan Fund, right?
Yeah.
And Lynch at the Magellan Fund, who retired when he was 46.
But isn't this a goal? Like, people go back years ago, and maybe it was easier when everybody got pensions and you could actually say, at this point, I can retire and I'm going to get a pension. But basically, a full 25% of Gen Z respondents in this new survey by Goldman Sachs Asset Management said they plan to retire before the age of 55.
I want to know what Excel models they're using to look at their future earnings and investment portfolio growth.
And it'll be interesting, too, if they're going to retire, how do they do it, since a lot of companies don't pay pensions anymore? So does that mean you put more money in the market? And does that mean if you're putting more money in the market earlier, more aggressively, do you not have more money to spend? And what are the economic implications of that?
I think something that is a big part of this conversation, Carol, is thinking about the modern workday and the modern work week, and how long that's actually been around. It hasn't been that long. It wasn't so long ago that we didn't really have the concept of a weekend, right, to take time off.
Right.
The concept of recreation, the concept of leisure. I studied the rise of leisure in college a little bit, and when you're farming, all day, every day, 365, you don't really have time to relax and take a break.
Was it a kind of electricity and factories that kind of created
labor movement as well,
and the labor movement as well? So, but
what comes next? That's what I'm saying. So that hasn't been around for that long. So what's sort of the next iteration of that?
Safe to say that the pandemic has taught people that, man, either I was working way too much, I didn't know who my family was, I want some more work-life balance. And so we're still trying to figure out what are the implications of that in particular when it comes to younger workers, older workers, men, women. We'll talk more about this in just a moment.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're looking at a mixed Wednesday. Bloomberg Business Week brought to you by SEI. Crises bring out the best in people, character, community partnership, together as one SEI. Go to SEIC.com/IMS. Apple has won a delay to court-mandated changes to its App Store as it appeals the ruling. Apple shares, they are up now by 2.1%. A federal appeals court today granted Apple's request to halt a December 9th deadline to comply with a judge's directive that the company allow app developers to steer customers to payment methods outside of the store. The ruling is a significant victory for the iPhone maker. Stocks are pushing higher. Equities advancing, putting the S&P 500 on track for its biggest three-day rally in a year. Right now, the S&P is up 6 points, up by about 0.1%. NASDAQ up 72, a gain there of 0.5. The Dow down 27, a drop of 0.1%. 10-year down 8/32, 10-year yield 1.50%. Spot gold up 0.1%, 17.85 the ounce. West Texas Intermediate crude up 0.3%, 72.28 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, it's the Bloomberg Big Take. It's among our most read on the Bloomberg today. It's all spelled out in the upcoming new issue of Bloomberg Business Week out tomorrow on newsstands at businessweek.com and on the Bloomberg. The story, one of the great rethinks, I think it's safe to say of this time, the great resignation. Why are workers saying bye-bye to jobs?
Tens of millions of people around the world.
That number alone just kind of blew
quit
me
their
away.
jobs. 24 million between April and September this year. That's
in the
U.S. That's U.S.
Isn't that crazy?
That is an absolutely wild number. Hey, let's talk about this with Joel Weber, editor at Bloomberg Business Week. He's with us in the Bloomberg Interactive Broker Studio. Also joining us is the economics editor of Bloomberg Business Week, Christina Lindblad. Hey, Joel, we're talking about this. We talk about this a lot from the U.S. perspective, but what is so great about this story is it brings together a really global perspective by talking about what's happening in the U.S. and China and even other places as well.
Yeah, so I think the great resignation here in the U.S., we can throw around that 24 million number if we want. It's been a thing. But what's interesting about this is that there's like other forces and other things that aren't called the great resignation, and the lie flat being really the embodiment of this. So it has created this sort of global thing that's happening of people basically just opting out of work. And for those of us who haven't done that, it's like a great mystery about like what's
what are you doing here, man?
And like how are you making ends meet? But yet there are massive implications for this, not only from economics, but also just like what a labor force starts to look like when you lose this many workers. But Christina, what's behind it all? What's happening, and what is, if you haven't heard of lie flat yet, where did it all come from?
Well, lie flat in China came from a social media post in which this young guy admitted, like, it was almost kind of embarrassed at the beginning. It's like, I haven't worked for a couple of years. He used to be a factory worker, and basically he said, this is like a philosophical choice that I'm making. It went viral, and to just get a feeling for how big it was, Xi Jinping and other members of China's leadership responded to that language directly, saying, you should not lie flat. And you know, I think the thread that runs through all these countries is that people are responding to the feeling that they're working really hard, but they don't feel like they're getting ahead. And one of the reasons is if they're living in big cities, all these other prices are going up faster than their wages or salaries, right? So they feel like their incomes are actually stagnant. And I thought that was a really interesting thing that made it different from other like sort of burnout moments that like we've captured in culture.
I do think about what Joel said too, like the great implications. We were just talking about a Goldman Sachs story that's saying young U.S. workers are plotting early retirements, and I'm like, well, how the heck are they going to do it? Because probably a lot of folks are not like my dad who got pensions, right? And so
those were young people in that survey. I now tend to think that we need personal finance courses in high school.
Well,
it's a miscalculation.
Well, I think about the economic implications. Like, so if people are not going back to work, they're not having babies, like what does this mean globally?
Well,
and does it
there are some case studies out there, like Japan comes up in the story, because there's a Satori generation, right, Christina? Like there's other places that we can kind of look to how this has played out before. What happened in Japan?
Well, I mean, it definitely, in Japan, it's almost like the Satori generation emerged after the country was already in decline. It was almost a response to this, the economic things that had already happened. Right. I mean, in China, what leadership is concerned is that if enough people sort of change their thinking that way, because, in order to live that way, you really have to pare down your lifestyle.
Which we found this one guy, it's like
4 shirts.
4 shirts, 8 long sleeve. I was like, oh man, that's like...
No, 4 long sleeve, 4 t-shirts.
Yeah. I was like,
I wanted to ask how many
post working from home, yeah, that's exactly sweatpants.
Funny, but sweet.
Right? No, it would. I mean, if it really took off worldwide, it would definitely have economic implications. So in
does
terms
it
of
stick,
consumption.
or is President Xi onto something in terms of this whole idea? We all talk about this wealth gap, and if workers get to feel like they're making more money, able to live in cities more easily, get to share in the wealth, could that put an end to some of this? Or is it more than that?
Well, I mean, I think that it could, the pandemic lies on top of all of this as sort of this extra kind of anxiety that people are feeling. I think that maybe like what China is doing or what employers on their own can do can sap some of the energy from these movements by addressing these concerns. But one of the issues, though, is that young people haven't truly verbalized their demands about what they want, from it's not like they're saying to their bosses, do this for me and I will stay. They're just kind of like saying, no, I can't.
Yeah, I mean, I guess I have so much to... This brought up so much, plus the Goldman Sachs story that we saw earlier today. And it just had me thinking about where we are as a society globally and how much this has to do with the pandemic versus how much it has to do with the idea that, maybe for the last 30 or 40 years in China, the idea of 996 worked, and they don't need that anymore because China has grown so quickly. And, the rise of leisure here in the United States, it's really some product of the, 20th century. And the idea of the 5-day work week, like the idea of pulling back. Are we at that point in history where productivity has gotten to a place where we can step back a little bit?
Well, and another thing we haven't talked about here is just the role of tech in this, of being able to maybe have a gig job where you just work a little bit when you want to. And, there's a quote in the story of like, I play 3 days and then I work 1 day, that idea, we just, when you think about how the week is structured, you work 5 days, you take 2 days off. That was all so that we could basically like make factories work. Suddenly, when you throw in variables like we're beginning to see and compensate people differently, incentivize them differently, maybe that looks like a radically new world. And that's sort of what this starts to glimpse.
Right, and I think about some of the, I just remember doing a story on Pixar years ago, and they just, if people wanted to work in the morning, they wanted to work a full day, and then maybe take some time off. Nobody cared as long as things got done. And I do wonder, are we getting closer to that? We just got about 30 seconds.
I think that for creative types, especially, this kind of flexible arrangements, may work. But like you said,
putting Business Week to bed, would that work?
No, we have
you're right.
Hard deadline. We're on the clock right now.
No lying flat at Business Week.
It's a big story. We have David Rubenstein coming up of the Carlyle Group, and it's something we want to talk about with him and how he's thinking about that as well.
I want to know too.
Yeah, right.
Does he get it?
I don't know. Is he like?
No, he's working all the time.
Yeah.
He's a busy guy.
Incredible story, incredible reporting. Christina Lindblad, thank you so much. Economics editor at Bloomberg Business Week. It's in the upcoming issue of the magazine. Jill Weber, editor at Bloomberg Business Week. No lying flat for us.
Not yet.
Not yet. You're listening to Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow back in the green. Stocks higher across the board. S&P 500 on track for its biggest three-day rally in a year. Right now, the S&P is up 9 points. That is a gain of 0.2%. The Nasdaq Composite Index rallying 84 points, up 0.5%. The Dow now higher by 10 points, up less than 0.1%. The Nasdaq 100 Index up 0.3%. Russell 2000 up by 0.9%. Dow transports are lower now by 0.5%. 10-year down 10/30 seconds. 10-year yield right now 1.50%. Gold higher, little changed, up less than 0.1%, up $1.70 an ounce to $17.85. West Texas Intermediate crude oil up 0.5%, $72.43 a barrel. As for the Federal Reserve and the market backdrop, Alicia Levine is chief strategist and head of equities and capital markets advisory at Bank of New York Mellon.
We're entering a lower liquidity environment moving forward. That means whether the Fed hikes in May, June, July, or September, it is still, the next move is still a hike. It's not a cut. So we're really in a new regime here.
Again, 10-year yield 1.50%. Southwest Airlines says it expects to be profitable this quarter and for all of next year on its way toward generating as much as $1.5 billion in earnings and paying dividends in 2023. Southwest Airlines shares just moving lower right now, virtually unchanged, down less than 0.1%. Among some of the other airline names today, UAL is up by 4%. American Airlines Group advancing 2.1%. Delta up 2.2%, rounding out the big five carriers. JetBlue up by 3.1%. Recapping stocks higher, S&P up 8, a gain of 0.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So in his latest episode of the upcoming Peer-to-Peer Conversations on Bloomberg, the Carlyle Group co-founder and co-chairman David Rubenstein catching up the president and CEO of Hilton Worldwide, Chris Nassetta. David, of course, the author of a series, How to Lead on Leadership, The American Story. Those conversations he's had with so many historians, and his third in that series about the arc of the U.S. as a young country as it invented and really reinvented itself. That book, The American Experiment, Dialogues on a Dream. David Rubenstein back with us on the phone in New York City. David, how are you?
All right, how are you?
Doing okay. Chris Nassetta, love talking with him. You had a really deep dive of a conversation with him. What stands out from you in that conversation and how the hotel industry, Hilton specifically, is doing?
The hotel industry suffered probably as much as any industry, perhaps with the sole exception of the cruise industry, which pretty much shut down completely. The hotel industry dramatically saw occupancy go down. However, occupancy is now coming back mostly from travel and leisure, not as much from business, though business is coming back a bit. The stocks, though, of the travel lodging companies are done quite well. I mean, right now, Hilton is at an all-time high. I think Marriott is near an all-time high as well. So the market is anticipating future growth. And the real challenge that the hotel companies have, and Chris Nassetta talked about this, is where do you get employees? A lot of employees went away, and now they got to hire them back and probably higher wages. And as a result, you're probably going to have some increases in the cost of rooms. In addition, should you provide all the services that you were providing before? People are used to having daily towel service and daily makeup service in their beds. Do you have to do that? Do you have to give free breakfasts every morning to some of your patrons? Some of these things are going to be looked at by companies like Hilton and others.
So what do you think, David, about the potential permanent shifts that we see on the other side of the pandemic, when we do get to the other side of the pandemic, when it comes to travel, leisure, and hospitality?
Well, I know from the business community, from my point of view, if I had to fly across the country for a one-hour meeting, I used to do it. Now I'm happy to do a Zoom. So I'm not traveling quite as much as I used to. I suspect it'll come back at some point. But in the pre-pandemic, I would go to the Middle East or go to the Far East
for a day or two and now come back. And now I'm a little more reluctant to do it because you can do so many things on Zoom. Obviously, you can't do everything on Zoom, and you have to have personal contact at some point. But I do think that business travel will be much more slow to come back, much slower to come back.
Hey, David, did Chris say anything about, well, because we talk a lot more about more automation coming in, robotics. There's a lot more things we can do online with the hotel industry that we couldn't before. Does he say that they're making investments or helping, out some of their team members by really introducing automation that maybe sticks with us going forward?
Well, sure. They are doing that. Right now, for example, rarely do people, need to check in anymore. You can just get your ticket online, more or less, or now they're going to use face identification to some extent to check in. So I think technology is going to dramatically change the industry, and clearly the industry, is a global industry. I mean, Hilton is all over the world, and they have thousands of hotels, and they have in different categories. That's a big change in the last 20 or 30 years. Used to be there was Hilton, there was Marriott. Now Hilton has about 15 different brands. Marriott has probably something similar. So you can have something for every different price point that you want.
Hey, one thing we were dying to ask you, David Rubenstein, and it has to do with a couple of stories that are among the most read on the Bloomberg. One has to do with Goldman talking about young U.S. workers are plotting early retirements. They're, thinking about getting out a lot earlier. And then we've got another one on the Bloomberg Big Take. It's about the Great Resignation, about how we've had, more than 24 million from April to September here in the U.S. alone quitting their jobs. We're seeing it, though, as a global phenomenon. And in some countries, we've already seen it happening even pre-pandemic. What's going on? Why is everybody quitting? Why are younger folks saying, I've had it? Are we missing something? What do you make of this trend?
Well, my generation, basically, after college or graduate school, you went to work and you worked until you were 65 or 70, and maybe some cases even longer than that. Younger people are saying, well, I can work out of my home a bit. Why do I need to work in the traditional way? And secondly, maybe I don't need to work quite as long. I can make a fair amount of money if I do well and retire at 55 or 60 or even 50. So the world is changing, and the world always changes. I'm not surprised. The pandemic has really changed the way people look at the world. I know my own generation has looked at the world much differently because we're worried more about getting the COVID and getting to the point where we can survive this because of the age group. And more people who are older than me, even, I'm in my early 70s, are saying they don't want to work anymore either because they just want to retire and recognize that life might be easier if they just retired.
Are there concerns, though, about productivity if we see this?
Well, productivity it generally increases because of technology. So technology tends to make productivity get much better. Some countries better than others. Yeah, productivity is always a challenge, but as a general rule of thumb, productivity does increase even when you have fewer employees.
Well, what about, though, an economic or market rethink, David? Like, I do wonder if you're retiring early, or maybe you're saying, you know what, I don't need so much in my wardrobe, even if you've done well, like you just pare back. Are there implications that we need to be thinking about?
Well, sure. I mean, people probably don't need to buy. I used to buy a lot of business suits. Probably don't need as many of them. I used to buy a lot of ties. Probably don't need a lot of them. And people probably are going to just change their life a bit. It's interesting that the Industrial Revolution changed the way we live or work over about a 100-year period of time. Mm-hmm. The Internet maybe over a 25-year period of time. The smartphone over 7 years or so. And now, over just 1.5 years, we're changing the way we live and work because of a pandemic that was never anticipated. And whether that's a good thing or not, it's clearly here and it's a reality. And people are much different in the way they look at work. They don't view it as an obligation so much. If they don't enjoy it, they're not going to do it.
I wonder if technological innovation, though, has kept up with the worker attitudes. We're not seeing, we're having a hard time in the United States finding long-haul truckers, but we're not seeing self-driving trucks at this point on roads.
Not yet.
Not yet. It's a challenge for Amazon to keep employees, incredibly high turnover, but, they're not being replaced by robots at this point. So isn't there some concern or trepidation about the idea that productivity and technology hasn't caught up to worker attitudes?
Well, workers have higher ambitions of what they want to do, and the kind of jobs you might get by working in a warehouse and fulfilling orders for Amazon may not be as intellectually challenging as what some people really wanted to do when they went to college or some kind of vocational training. Clearly, things are going to have to adjust. But in the end, I think the American workforce is pretty resilient, and I think we'll come back. We can't compete with the workforce in terms of cost in China or Asia, but we can, I think, do a pretty good job in making productivity better than it has been. And clearly, technological leaders usually come from the United States.
Hey, David, your series of books, your trilogy, on leadership, historians really looking at the growth of this nation and how it's evolved, and really talking with leaders as we constantly, as you say, these innovative cycles seem to be happening in less time here. How do you see, in terms of the next trends or the people that you think we really have got to keep an eye on that really are going to be determining maybe the future trajectory? And it can be politically as well as on a business and market front.
Well, in the business world, change is usually made, as it is in the political world, by people who are younger. Revolutions are not usually led by 70-year-old people. And as a general rule of thumb, business change is usually led by demand from people who are in their 20s or 30s. So how many people have now caught on with the kind of social media devices that really the young people really focused on and really helped generate? Same with computers, and the same with other kinds of services that we now rely on. Many of these came from younger people. So I think it's a very good thing if boards of directors in companies would get younger people on them. I think it's a good idea for boards of trustees as well, and nonprofits, to have more and more people on them who are younger. I rarely see on the boards that I serve people under the age of 40. But really, that's where the change is coming from, and probably it's not a bad idea to have younger people on these boards or in senior positions advising boards of directors or trustees.
So why do they resist? What happens, like, if you bring that up and you're on a board and you say, hey, guys, I love you all, but we need to skew younger? We've certainly seen the implications, the benefits of having diversity on boards, but what's the response?
Well, sometimes people are always willing to nod and say, yes, let's take that up, or we should think about it. And then if you're not persistent, you won't get very far. So persistence is a real hallmark of leadership, as I've said in my book. So you've got to be persistent, and I probably should be more persistent in pushing the idea of having younger people advise boards of directors and boards of trustees or be in more senior positions, because the consumers in the world, the people that are changing things, are really younger people.
Hey, David, let's talk markets here, because you've seen lots of market cycles throughout your career. Help us understand and put into context the one that we're seeing right now, with the S&P 500 just continuing to grind higher, and, the COVID variants still making their way around the world, and concerns about growth.
If the markets got anything wrong initially when COVID came about, it was that the markets were going to be more resilient than they turned out, than people thought. In other words, when we went through COVID, people thought, okay, the economy is going to collapse, and all of a sudden the market will collapse. But as it turns out, maybe because of federal intervention for sure, but because of federal support and other factors, the stock market actually has gone up. And in the private equity world that I operate in, markets have never been better. People are making staggering sums of money compared to what they did before. So it's very difficult to predict. Right now, I would say that the federal government is probably going to increase interest rates next year. That should have a somewhat impact on the market of probably reducing prices a bit. And I suspect inflation won't go away, so that might impede the market a bit. But I don't see any collapse in the near term. I don't see any kind of correction of any consequence. We might have a one-day, two-day blip because of something that happens, but a 10 or 15% market correction, I don't see that for an enduring period of time in the next year or so.
David, what is the productive conversation? I mean, here at Bloomberg, we talk a lot about the Fed, we talk about inflation. You guys were just touching on it. But, I mean, what is the productive conversation to have about that right now?
I think people should recognize that inflation was artificially low. Historically, throughout most of the 20th century, inflation was 3 or 4%. But for the last 20 years or so, it was 2% or less. That was abnormally low for a number of reasons. Inflation got to the double-digit range when I was in the White House under President Carter. We're not likely to see that again for a number of reasons. Our economy is much more global than it used to be. We don't have a bigger percentage of the workforce being unionized as before. And the Federal Reserve is, I think, more sensitive to interest rates increases than they might have been many years ago. So I don't really think we're going to have that problem again in terms of high inflation. But I do think we'll have inflation probably above 2%, and maybe for a while, maybe somewhere between 3 and 3.5%. That might happen for the year or so, but it's not a calamity.
Yeah, no, that's a good thing to kind of remind everybody on that. Hey, last question, David. I mentioned your 3 books, How to Lead, The American Story, The American Experiment. American Experiment, there's some just great conversations about our country and as it changed and evolved. If you look for inspiration, is there one particular interview that you might suggest to our audience at this point?
Well, the disappointing one to me was the interview with Ken Burns. I lived through the Vietnam War, not as a combatant, but as a civilian, as a student. And he said that actually it's clear from the documentary evidence that the presidents of the United States who lived through the Vietnam War knew we could never win that war militarily. They knew it. It was just a question of the politics of it. They didn't want to admit that they were going to withdraw and be seen as a loser. So we fought a war in which 58,000 Americans died and hundreds of thousands of Vietnamese died, really for a political reason and not for a military reason.
All right, we're going to leave it on that note. David, thank you so much, as always. David Rubenstein, happy holidays. Be well, be safe. Founder and co-executive chairman of the Carlyle Group and host of the David Rubenstein Show, peer-to-peer conversations. As I mentioned, his latest book out, The American Experiment, Dialogues on a Dream. It's a great holiday gift. I'm just going to put it out there.
It is.
It's just great conversations.
Yeah, features conversations with Madeleine Albright, Ken Burns, he mentioned, John Meacham, Walter Isaacson. The list goes on.
All right, so great to catch up with David on so much. Right now we want to catch up with our Dana Hull, who follows Tesla for us, because shares of Tesla bouncing around today. We've seen them down about 2% at their lows, and we've seen them up maybe fractionally at its highs. She is technology reporter at Bloomberg News. She writes today on how Elon Musk is signaling that the company is, quote, all grown up. She joins us from our San Francisco bureau. Dana, good to have you here. Tell us about your story and what it means for Tesla to be kind of all grown up here.
Yeah, I mean, I think what's interesting to me is that Elon Musk has always balanced his roles at Tesla and SpaceX. And for the first time this week, we kind of saw him say that he's focusing more on SpaceX, which is kind of new. I mean, he's always bounced back and forth between the two, but at the Wall Street Journal conference earlier this week, he said that SpaceX, and in particular its Starship rocket, takes up most of his mental energy these days. And so it's kind of like the script has been flipped a little bit. You know, Tesla has $1 trillion valuation, seems to be going really well. You know, electric vehicle demand is high, like everything is kind of firing all cylinders. And SpaceX is where he's like, you know, sleeping on the factory line and worried about these Raptor engines and sending out these all hands on deck emails. So it kind of reminds me a little bit of Tesla in 2018.
Well, Dan, I don't want to draw too many parallels here, but it also reminds me of Jeff Bezos and what he did with Blue Origin and his comments when he was still CEO of Amazon about how he was starting to spend more time working on Blue Origin. Of course, Blue Origin, a very different company than SpaceX at a very different point when it comes to what it's doing with reusable rockets and how far it's able to get and who it's able to carry to certain heights. But does it mean that Elon Musk could perhaps be stepping away from this, you know, being CEO, despite the fact that he calls it kind of a meaningless title?
Well, I think you're starting to see him relinquish some control, which is a big thing for him. I mean, he, is, by all means a very hands-on executive. But for example, for the first time in in a decade, he wasn't on Tesla's last earnings call. He let the CFO, Zachary Kirkhorn, lead the call for the first time. But then, he also said that he would be back in January to be on the call again. So he's not totally stepping away. But just the fact that he allowed another executive to lead the call was kind of a big sign. I think it's he's 50, he's running two companies. Both companies have accomplished an enormous amount. Where he spends his time is usually indicative of where he feels his energy needs to be. And at the moment, it's really focused more on SpaceX. Now, that said, it's not like the pendulum has totally swung and I think he's going to step down as CEO tomorrow or anything like that. But I think it's just a sign that Tesla's in a good place. He goes where his energy is needed, and he's spending most of his time now in Texas on the SpaceX stuff.
It's so funny, Dana. I feel like it's just like how things are, with the pandemic, creating a vaccine. It's all rolling out in front of us. I feel like that's what we get from Elon Musk. If he's having a bad day or a good day or feeling a certain way, we just know, right? He just lays it out there. Yeah, and I mean, so do we have to be careful not to read too much into it? But he's just saying this is a little tricky right now.
Yeah, I mean, I think what people admire about Elon is he's very candid. I mean, he's probably the most candid CEO around. And some people might say that that's orchestrated or all a marketing ploy. But when he's angry, he lets you know. And when he's worried about something, he makes it pretty clear what he's focused on. And what he said about Starship was sometimes I question whether we should be trying to do this at all. And so I think that's refreshing to people. I mean, no one scripts his comments. He just sort of speaks off the cuff all the time. But I think he is fairly honest about what he's worried about. And, so it's just interesting. I mean, the space reporters who cover SpaceX are like, oh, my God, SpaceX has been crazy. I mean, to me, the fact that we got a leaked email out of SpaceX saying, you know, all hands on deck. I know it's the Thanksgiving weekend, but I'm going to be on the Raptor line and you should come too. I mean, we just haven't seen an email like that for a while, particularly from SpaceX.
Yeah, that's like the kind of email that we saw 5 years ago from Tesla, Dana.
Right. Right. It was like deja vu, but like different company.
Exactly. Hey, take us into what is going on at SpaceX right now. And I know, you know, you certainly cover Tesla more closely, but what is SpaceX working on that's so challenging?
Yeah, so they have kind of two big projects. They are trying to build out a satellite network that they call Starlink, and they have about 140,000 customers globally, but they need to get more satellites up in space in order to build out the network. At the same time, they're working on this next generation vehicle called Starship, which uses a new engine called the Raptor engine. And, you know, there apparently are problems with the Raptor engine production line. So that's kind of like front and center. And then at the same time, they're waiting for the FAA to give them approval to kind of expand their whole place in Boca Chica, and there are a lot of environmental concerns, so they're sort of waiting for some regulatory approval there. But, you know, SpaceX is doing well. It's just that, like, Elon is very anxious to get these next projects going. He wants to fly Starship in the next year, and they need to fix these Raptor issues.
Well, and that's what I was thinking. I'm like, when we look at the space industry, we think SpaceX is actually doing well, right? He's getting the government contracts. It provides some clarity, Dana, about kind of the company's, you know, certainly financials going forward. I mean, like, where does, you know, you talk about the projects he's working at. What is his longer term vision for this company?
Well, it's always been to make life multiplanetary and to colonize Mars. And so, yeah, I mean, SpaceX is doing fine. Like, their Falcon 9 rocket is a workhorse. They've got this incredible, you know, contract with NASA. I mean, Boeing hasn't flown astronauts at all. SpaceX is like regularly ferrying astronauts to the space station. But long term, Musk really wants to go to Mars, and this rocket, Starship, is key to that.
How key is the idea of Tesla's new headquarters actually being in Texas, where SpaceX is, and where he spends more time in Austin? Should we read into anything about, I hate to use the word synergies, but the idea that geographically they're closer?
Yeah, I mean, I think it's easier for him. You know, so Musk moved to Texas himself because his companies are sort of working on two big projects. Tesla is building this massive factory in Austin. SpaceX is working on Starship. I mean, he was constantly flying back and forth between Brownsville, Austin, and LA. Now he's just mostly in Texas, which I think is much easier for him personally. And there are synergies between the company. I mean, they share a VP of materials science. They help each other out. Like, I mean, so I think it makes sense that he's in the kind of center of, you know, the energy economy, the free market economy. Texas has always been a big state for Tesla customers. A lot of people in Texas have the cars. The space industry is based there, and NASA's based there. It makes a lot of sense.
All right, two headlines I just want to ask you about. First of all, the one that talked about, was it the transportation, I can't speak right now.
NHTSA.
Thank you. I always hate that acronym. Anyway, NHTSA, kind of looking into their in-dash video games. I mean, apparently you can.
What, this is not a good idea? Hold on.
Use them while the cars are working? What's up with that? What do we need to know?
Yeah, I mean, it's a little so the New York Times had a story this week that was about how you can play Tesla video games even when the car is driving. Tesla has long promoted the fact that you can, like, sit in your car and watch Netflix, right?
Yeah.
The fact that you can potentially do that while the car is moving is a bit of a problem. But, you know, I don't know how seriously NHTSA is looking at this. I mean, they said they're looking into it, but it was sort of like the comment came after the New York Times story, so it's not like they announced that they were opening like a big probe. But yeah, I mean, I think NHTSA is looking pretty carefully at Tesla on a number of things. It's just, how long is it gonna, like, what are they actually gonna do?
And like, you also do wonder, are people at least, do they have some intelligence that they maybe aren't going to play a game if they're in the car? I'm just saying.
Is that the?
I mean,
yeah. Go ahead, Dana.
Oh, just distracted driving is a huge issue. And I mean, people are constantly looking on their phones while they drive. And we're seeing a rising number of pedestrian and cycling deaths. I mean, it's a big problem.
Hey, go ahead, Tim.
Well, it is a huge problem. And I'm wondering if the signal that Tesla sends with this is that they are, you know, on their way to full autonomy, where you can be completely disengaged from the experience of actually piloting the vehicle.
I mean, that's what the full autonomy is always just around the corner, according to Elon Musk.
Hey, one last question. We did see a headline, Tesla delivering about 52,859 China-made cars in November, down 2.8%. Looks like month over month. Is that a big number, just quickly? Or how do you read that?
I don't look too closely at the monthly numbers because there's sort of a difference between like how many are sold in China and how many are exported, and like because of the supply chain issues and the crunch of ships, like month to month doesn't really intrigue me as much as the quarterly figure.
All right, good to know. This is why we go to you, because you put it all into context. That's Dana Hall, of course. She follows Tesla for us here. She's a technology reporter at Bloomberg News there in our San Francisco bureau. We should point out, too, that we did see earlier today that Tesla had a new street high when it comes to a target price. This is analyst led by Pierre Ferragu, and this was New Street analyst setting their price target at $1,580, highest on Wall Street.
Tesla shares at about $1,070 a share right now.
All right, you're listening to Bloomberg Business Week. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
I need some anti-cranky juice.
Oh, wow. If you can invent that, you'll become a billionaire.
Creedy's shaking her head. She knows how. She feels me.
Hey, you're allowed to be cranky once in a while.
Yeah, I am.
All right.
Let it go. Let it go.
Punch the card this week.
All right, we're going to get to the chart of the day with Kriti Gupta in just a moment. In the meantime,
Let's check out the trading day with Charlie Pellet.
Never cranky.
No, I'm not. Spend some time with me, Carol Master, and the world is great. Here's what's going on.
That's true.
We've got 28 minutes to go ahead of the closing bell here with the Dow, the S&P, NASDAQ. They're all advancing right now. Equities up, putting the S&P 500 on track for its biggest three-day rally in a year. S&P up 12 right now, up 0.3%. The Dow up 28, up by 0.1%. NASDAQ up 81, gain there of just about 0.5%. 10-year down 10-30 seconds. 10-year yield right now 1.50%. Gold up 0.1%. Spot gold 17.86 the ounce. West Texas Intermediate crude oil up 0.7%. 72.58 a barrel on WTI. Russell 2000 cannot ignore that today, up by 1%. NASDAQ 100 index up by 0.3%. Apple shares pushing higher. Apple winning a delay to court-mandated changes to its App Store as it appeals the ruling. Apple up right now by 1.8%. Pfizer and its German partner BioNTech say initial lab studies show a third dose of their COVID-19 vaccine neutralizes the Omicron variant, results that will accelerate booster shot drives around the world. Gigi Granval is a senior scholar at the Johns Hopkins Center for Health Security.
This is based on one study. There are going to be many more over the coming weeks that shows that even though there is a significant degradation of potential vaccine efficacy in response to Omicron, that there is some protection. It's not a complete escape.
Gigi Granfell of the Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder and majority owner of Bloomberg LP, parent company of Bloomberg News. Pfizer shares, they are lower now by 0.5%. Its German partner BioNTech, the ADRs, they are down 2.85%. AstraZeneca's ADRs up 0.8%. Moderna up now by 0.7%. J&J, Johnson & Johnson up by 0.6%. Again, recapping, stocks are higher. S&P up 13, up 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, it's just after 3:30 Wall Street time. We do have about 25 minutes away from the market close.
Feels like it's 10 o'clock at night.
It does.
It's so.
You know what? Only
sorry.
2 more weeks, Carol, until the days start to get longer.
Thank you.
Yeah.
You know, you're
The
always a
glass is
glass
half full, right?
Well, that's what we love about Tim Stanovic.
Hey, what we love about Kriti Gupta is her chart of the day. So she's joining us now. She's markets correspondent at Bloomberg News. Kriti, what do you have for us today?
Yeah, I have my eyes on the labor market and the stock market. You know, we're at a time when everyone's talking about inflation. We're talking about what the Fed is going to do next. But I think sometimes we forget that it's actually the jobs market that the S&P 500 responds to the most when you look at the long term. And so my chart of the day really targets the S&P 500 relative.
I love this correlation. This is cool. Okay, go ahead.
Relative to the unemployment rate, except this is what I did. I flipped it because you can do that on this fancy schmancy Bloomberg terminal. And basically what it shows is that they're moving pretty identically. So essentially, when you have lower unemployment, the stock market tends to rally. And the logic behind it is fairly simple, right? If you have more people employed, more people are getting their paycheck, more people are spending money, the economy's growing, corporate profits are rising, and therefore the stock market is as well. But that's only a relationship that's developed really since the 1990s. And if you go back further, it's not as clear that those are connected. And the reasoning for this, and this is a big shout out to our producer Pete Dioteris, as well as our very own Michael McKee, the U.S. economy wasn't that service-oriented pre-1990. So if you actually look in the 1990s, you had this major transformation from the manufacturing-based economy in the United States to services, and that has created this very clear correlation.
That's really cool.
Thanks.
That makes a lot
I
of
try.
sense. No, it's really interesting. Although, okay, so I'm going to throw this in because I'm thinking of the story that we've been talking about a lot, the Great Resignation.
The lie flat.
Like, it doesn't necessarily, unemployment rate, and this goes to labor market statistics come out of different surveys, but it doesn't really take into account the people who have just turned their back on the workforce. And I still am wondering, okay, what's the longer term impact of people just saying, I've had it in terms of economic momentum and just, I don't know, a lot of questions out there.
And that's a great point because we actually got JOLTS data out today, which is essentially job openings, once again nearing a record high. But the quit rate, to your point, is actually seeing its first drop since May. It's still very close to its record high. Folks, you guys can actually go check this in the story that I wrote up about this chart of the day. It's on Bloomberg.com, it's on the terminal. Go check it out because we talk about this idea that yes, we're talking about the labor market, yes, we're talking about the employment rate, but there are these kind of intricacies in the labor market that right now the focus is all about the Fed and inflation, but Chairman Powell was very clear in saying that dual mandate for the Fed, that maximum employment versus stable prices, well, those are mandates that are at odds with each other. And right now it's very clear the Fed is saying, well, I think we feel okay about the labor market, let's focus on inflation, and that might be a problem for the stock market.
You do wonder if he has a favorite child, like inflation over labor
kind of
market.
feels like
right?
he does, right? And right now it's inflation, which is so crazy because that wasn't his favorite child for a very long time.
Wait, you think his favorite child right now is inflation?
I think it's turning that way, especially.
Well, as of last week, but I mean, up until now, it has been we need to get employees back to work.
Yeah, and I would agree with that, except now that they're saying, well, inflation isn't transitory, so you have to start targeting that. And you can see that in the bond market, right? The rate hike bets are continuing to climb despite even talking about the Omicron variant.
And he was very clear for such a long time in terms of the labor market and wanting to make sure that in terms of the bounce back and jobs coming back, that it was a diverse labor force that gained in terms of the upward momentum. And so this is why I think the market's just kind of taking a little bit of a pause. We're going to wait to see that inflation report, but we're going to wait to see what other clarity that Jay Powell gives us next week in that last Fed meeting of the year. I think it's going to be a big one.
It's going to be a huge one. And what's important is that we want to know about their bond purchase tapering, right? Because they still haven't given us the January figure.
Do they pick up momentum?
Whether they or slow it down or whatever that may be, we don't know. We don't know what that number is. So that's going to be a bigger deal.
And even if they change the pace, let's say they do it at a faster pace, it doesn't mean they're going to do it more quickly and then right away start to raise interest rates.
Right.
I mean, there is so much wiggle room.
He's made a big point of distinguishing those two things.
But I will say there's a difference between what Chairman Powell says and what the market hears, right? Because the market doesn't believe Chairman Powell when he says that.
So watch the bond market because that will really be telling in terms of what they expect, because we've definitely seen that in terms of what's going on, whether it's a flattening of the yield curve and so on and so forth. Nice chart.
Thank you.
Are you done?
You like that one, Carol. She really liked that one.
I do.
You can tell.
Well, it's simple. Sometimes I think simple concepts, to me, people can run with it, and it makes sense.
Well, what I like about doing the stock market is it's really easy to do stock market charts because it's all about growth, right? And there's so many different metrics for growth.
Again, simple, makes sense, right?
Hey, if you want to see this chart or the charts of the day moving forward, just send an email to Kriti Gupta. You can reach her at kgupta129@bloomberg.net. Also, check out her Twitter and Instagram. You can do that at Kriti Gupta News.
It's like kgupta129, come in.
Got to get you a new email address. That's my mission.
Oh, my God. All right, let's get back to world and national news. Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. A booster dose of the vaccine from the drug companies Pfizer and its partner BioNTech appears to be effective in countering the new Omicron strain of COVID-19.
The third shot makes the vaccine as effective against the new strain as 2 doses were against what came before, Pfizer Chief Executive Albert Bourla said in a Bloomberg interview.
3 doses will provide for Omicron the same protection like the first 2 doses provided for the original strain. It was on the 95% effectiveness, the first 2 doses.
Bourla said he was citing preliminary data from laboratory tests, with hoped-for confirmation from tests of vaccine recipients expected in a couple of weeks. Meanwhile, public demand for boosters is rising sharply. In Washington, Irv Chapman, Bloomberg Radio.
President Biden says he told Russian President Vladimir Putin yesterday that there would be severe consequences if he invaded Ukraine, including U.S. reinforcement of NATO countries. Biden says he was very straightforward in their 2-hour video conference call. Opening statements are underway at the manslaughter trial of former Minnesota police officer Kim Potter, who is accused of killing black motorist Dante Wright. Her attorney, Paul Ng, says she made an innocent mistake by pulling her handgun instead of her taser when she shot Wright during a traffic stop.
An error can happen. We are in a human business. Police officers are human beings. and that's what occurred.
The prosecution, meanwhile, says the veteran officer was negligent since she had undergone extensive training that warned about such a mix-up. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much.
What are you laughing about? Share with the class.
Sometimes, no, I can't.
Okay.
I can't.
Don't share with the
sometimes,
class.
well, I will share with the class, but sometimes I share something with Tim, and I think he's like, "Oh, Masser."
Oh no, you're cool. You're cool. You're hip.
I'm hip. That is so scary. So this story by our Emily Grafeo and Sam Potter, it is about Kathy Wood, someone who we really appreciate when she gives us time. We've talked to her. Her second new exchange traded fund of the year launching today, just as her favorite tech stocks finally catch a break.
Yeah, we've been talking about this one for a while. It's the ARC Transparency ETF. You can find it, the ticker symbol CTRU. It began trading a day after every one of its siblings jumped thanks to the global risk rebound. Tuesday's surge in American growth share saw Wood's flagship product, that is, of course, the ARC Innovation ETF, ARKK, post its biggest advance since March.
So listen, she knows, you know her story, innovation, disruption. It's been a story she's been doing for the last 7 years since she started up. But we know the tech trade, and I find it interesting that we often, as soon as we start to see rates go higher or we question, we're like, these names, no more, we're not going to see money go into them. So as a result, we've seen a lot of the names that she makes big bets on in her ETFs really pull back. And we've seen the tech market really stall out. Well, she's been certainly moving into some of them, and the rebound that we've seen a lot of those names has been good for her in terms of performance.
And with this new ETF that began trading today, the Transparency ETF, CTRU, it taps into the boom that we've seen for investments with higher ESG standards. It tracks an index of the 100, quote, most transparent companies, several of which already appear in ARC's holdings, like Tesla, for example. The gauge excludes, though, industries including alcohol, banking, gambling, and oil and gas.
Hashtag transparency. This is going to be a new buzzword as we move towards ESG, sustainability, something coming our way. I'm going to say here at Bloomberg that's going to, we are doing more and more reporting on it, but people need to understand exactly what this means. So I think the idea of transparency, App Harvest CEO I caught up with, our president, he was talking about transparency. This is a big deal.
It's a big deal. Again, we're going to start seeing more of it, like you said.
Yeah, no doubt. All right, Bloomberg Business Week, and this is Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ all advancing. S&P 500 on track for its biggest three-day rally in a year. In fact, right now, S&P at or near session highs, up 11 points, a gain of about 0.3%. The Dow up 35, up 0.1%. NASDAQ up 72, gain there of 0.5%. Has been a choppy session. 10-year down 12.30 seconds. A 10-year yield right now 1.51%. Spot gold up 0.1%, $17.86 the ounce. West Texas Intermediate crude up 0.7%, $72.50 a barrel. Earnings after the bell today will include GameStop. That stock down now by 2.1%. Rent the Runway also reporting after the bell, down now by 10.8%. And Restoration Hardware, actually known as RH, it is up now by 0.2%. Michelle Meyer, head of U.S. economics at Bank of America, and one of the few women leading economics coverage at major Wall Street institutions, is leaving for MasterCard. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
Russia's deployment of tens of thousands of troops to its western border has stirred fears of a potential invasion of Ukraine. The U.S. and Europe should prepare by giving Ukraine the means to defend itself and by making clear to Vladimir Putin the punishment Russia will face if he decides to start a war. That means offering immediate help to Ukraine's military in the form of anti-ship and anti-tank missiles, intelligence, and logistics assistance. The West should also prepare to impose sanctions on Russia's state-owned banks and the Kremlin elite and restrict Moscow's ability to access global debt markets. While the U.S. and Europe may have little ability to change Russian behavior in the short term, they can still alter Putin's strategic calculus. Firm and coordinated action is the best way to prevent further Russian aggression. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10 minutes to the closing bell on Wall Street on this Wednesday. And you know what we've been talking about. It does feel like we're taking a little bit of a breather here, but a little bit of an uptick here in the last few minutes. So we are now green on the screen when it comes to the S&P Dow and the NASDAQ, but just a little bit higher on the S&P 500. So call it a fractional gain there as well. Let's get to it with Lisa Erickson.
She's Senior Vice President and Co-Head at Public Markets Group at U.S. Bank. Lisa, thanks so much for joining us on the phone from Minneapolis, Minnesota. How do you make sense of the volatility that we've seen over the last week, really since, I'd say, Black Friday and the trading day that we saw there, the first when the markets had a chance to digest the news about Omicron, and really the rip higher that we've seen since then, the recovery?
Yeah. Well, first of all, Tim and Carol, thanks so much for having me. But to your point, it really has been very volatile over the last week or so. And I think what you see is that we've had really a very good fundamental picture with an uptick strongly across all of our major U.S. equity indices. And so when you get some new news like what has happened with the development of the Omicron variant, markets really have to price into that uncertainty. And then as additional news flow comes, there is going to be a positive rally as people perceive that risk softening. You know, from our vantage point, it really remains to be seen where this settles out. You know, it's probably going to take another week or two really to get more sense fully of the severity and the transmissibility of this variant. But in the meantime, it is somewhat encouraging that we've gotten some, early news of perhaps a milder variant than was initially expected.
All right, so help me out. Justina Lee of Bloomberg wrote this out in our 5 Things to Watch earlier this morning, and she said just last week everyone was worried
Lisa, about the impact of faster Fed tightening on risky assets with high valuations that make them more susceptible to rising rates. Now concerns over the variant being a drag on the economic recovery have faded, but it's less clear whether the Fed story has changed. So it's interesting that we've eased concerns about Omicron, but are we comfortable then if the Fed, ends up moving faster than we all anticipated? Because that was our big worry last week.
Absolutely, Carol. That's a great point. And Fed really is another big near-term as well as longer-term influence on what's going on with the markets. And to your point, really some of the concerns were magnified initially by the fact that Chair Powell really mentioned the possibility of a faster tapering. We do think that's really a key development going forward. I think the market expectation in our base case is that will happen next week when the Fed meets, but certainly a lot of the language around that announcement is going to be key, and seeing whether some of the balance of risk are both to the upside and downside on inflation are mentioned, or if it really is more of a hawkish tone.
Lisa, repeat that. What do you think is going to happen next week? What are you looking for?
Well, our base case, again, is that the Fed is incented and has spoken to really continuing to move forward the tapering pace, possibly to $30 billion a month from $15 billion a month. But again, I think the devil's really going to be in the details. And our main concern right now is, again, a more hawkish tone around that pronouncement, really just focusing on the upside risk to inflation. And what that means is the possibility of too hot monetary policy, especially when we look into next year and we see that the comparisons for inflation are going to get tougher. So they could actually be pivoting into an upswing just right when some of those numbers come down.
Exactly. And, we've definitely seen that with a flattening of the yield curve, or some of the conversations we've had over the last week about, whether, Treasury investors are warning us, Lisa, that, hey, folks, as we get into next year, we're going to see maybe growth slow down and there's some concerns. And could the Fed be making a misstep, perhaps? I hate to say, could we head into a recession? It's hard to even get your head around that at this point. But you do wonder, especially since Fed policy takes a while to actually have its impact, the timing of all of this is just so key.
Absolutely. And to your point, again, the base comparisons for growth next year are tough too. So, just at the start, growth is likely to come down to some extent going into the next year. So the Fed really is in a tough position because we have had some elevated inflation, and it is not completely clear how long that will continue to last. And yet, on the other hand, we know there's a possibility that it could come down a little bit, as well as, there's going to be some pressure on the growth numbers. So they're in a tough spot, and that's why really what we're hoping for is that there's some more balanced language around, the possibility of faster tapering. But again, it remains to be seen how they come out next week.
At least the narrative has been throughout the pandemic from the Fed, making sure that they're maximizing the ability for people to get back to work. And I wonder what you think now is more of a focus for Fed Chair Powell. Is it price stability or maximum employment?
Well, as he set out really earlier several months ago in terms of what it would take to begin the reduction of all of the stimulus that's been in place, it really was around both. It was around price pressures as well as maximum employment. And so I think what you're seeing is now both are more sharply coming into focus. On the employment side, we have gotten some recent strong prints, even just today, with some of the indicators on labor force. Again, I think those are strengthening the case that we're approaching that full employment picture. But again, since those are both key, we expect the Fed to continue to look at both of those as they move forward.
Hey, Lisa, so the S&P is up 25% this year. You've got the NASDAQ up 27%. You still guys like large caps. That's where you say investors should focus. And does that include large cap tech?
It certainly does. And we're really seeing a balanced opportunity among large cap stocks in terms of both interest in secular growth types of industries like technology, as well as cyclicals. And really the reason behind that is we've got, despite some of the potential risks we're talking about right now, a pretty nice economy. If you look at the macro indicators, they're really primarily on solid footing. And so that gives, with the reopening activity, both the opportunity for some of those secular growth trends to continue, as well as some of the reopening companies to do well. So that's really the focus on large cap. It really gives you a nice, balanced, diversified exposure across both types of sectors.
All right. Good to get your thoughts. Lisa, thank you so much. Lisa Erickson, she's Senior Vice President and co-head of the Public Markets Group over at U.S. Bank, on the phone from Minneapolis, Minnesota on this Wednesday. And this, as we see stocks kind of moving up as we get to that closing bell, but we're still just fractionally higher, just up about 15 points on the S&P, Dow up about 50, and the NASDAQ better by just about 98 points. So the NASDAQ, really the outperformer thanks to some of those big tech names. It's up about 0.6%. All right, everybody, it's time for Beyond the Bell. Coming up next with our Bloomberg TV team, we're going to take you down to the closing bell on TV, radio, and YouTube.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Taylor Rich, Nolly Bass again for Caroline Hyde, counting you down to the closing bell this Wednesday afternoon. Here to help take us beyond the bell, it's our global simulcast team, Carol Masser and Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences. Looking at an S&P 500 right now, Carol, at 47.01. We should point out, just for clarity, the record high is 47.04 and change. So we're basically, as Taylor said, right back to where we were just a couple of weeks ago.
Well, in the last few minutes, we're also interesting that we've just seen kind of a tail up to, in terms of the market highs are pretty much up and then just kind of rolling over off of it. So it feels like we're trying to get there in terms of the ultimate high on the S&P 500. We'll see whether or not we get there, Tim, in terms of those last few minutes.
You know, I wonder if investors missed out on buying the dip here, because we had a really interesting conversation earlier with Carlyle Group co-founder David Rubenstein. He said that the Fed will probably increase interest rates next year. Inflation won't go away. We could see that impede the market in the near term, but he doesn't see any sort of correction in the near future. Like, he doesn't see a 10 or 15% pullback in the next year or so.
I think that's an interesting comment about that pullback. And yet, underneath the surface, we're having an interesting conversation with Mandy Zhu, the equity derivative strategist at Credit Suisse, highlighting there is some of that hedging in the market. Eric Balchunas noticed that a little bit in the ETFs with a lot of buying in the TLT. So you do wonder with the staples, you do get a little bit of that hedging. And is that any indication here of the risk taking, but also wanting to be a little careful to the downside as well, Shanali?
Yeah, speaking of being careful, near record downside risk into options markets right now. So it is not cheap to be hedging. And remember, after that ugly November, people are pretty wary right now to take on additional risk.
All right, it looked like this was going to be a down day at one point earlier in the session. It's pretty much an up day all around. We should point out Dow transports are lower here on the day, but the Dow Jones Industrial Average, I guess you can call it higher, basically call it flat on the day, up about 33 points right now. The S&P 500 going to close just shy of that record high. The record high is 47.04, spot 54. It's going to close right now at 47.01, spot 19, up about 14 points to 0.3%. The NASDAQ Composite up 0.6%, 100 points to 15,787, and the Russell 2000, that's your relative outperformer here on the day, Carol, up 0.8% to 2271.
Yeah, speaking of outperformers, it was all about the travel industry, in particular those cruise lines. We're going to get into some of the specifics, but if you really go into some of the sectors, you see that reopening trade, especially when it comes to the travel industry, was up in a big way here today, Taylor.
It's so interesting when you talk about that travel industry. Come and take a look at, for our radio audiences, we do the sector winners and the sector losers. It's tech hardware, which is Apple, and then it's auto components, which is Tesla. That's pretty much everything you need to know to the upside, up about 1.3 to 1.5%. You go all the way down, it looks mostly even for a radio audience. There are a few gainers, even in the loser section, but some of the big underperformers, and Carol, this is interesting, the food and the staples, and you've noticed that the staples have been the big underperformer for the year. That trend continues just a little bit today after what's been a good outperformance in the last few weeks.
All right, so let's get to some of the day's gainers. I mentioned the travel industry. Check out Norwegian Cruise Line. It was up 8.2% by the close, just off its highs, atop the S&P 500 once again. Stock is up about 24% in the past 5 trading days. But whether it's Norwegian, whether it's Carnival, whether it's Royal Caribbean, we've definitely seen this up in a big way.
Where is it from its all-time high, though? Because you're still seeing a lot of these travel stocks. They're still down like 40, 50% from where we had, back in June or earlier this year when everybody was betting on that big rebound.
No, but that's a point. But, we definitely are way off from the highs that we saw. But you are seeing some recent momentum, certainly moving back into them. So whether or not that's expectation of whether it continues, I guess it depends on the latest COVID headline. Do you want to mention Apple? We talked about Apple a lot today, hitting an all-time high.
Did it get to $3 trillion today?
Almost.
No. It's so close.
10 points away.
I think it needs like another 4%.
Tomorrow's another day. 186-ish, I think, is about the math.
2.872.4 billion. That's the close on the market cap. It's unbelievable. Marching towards a $3 trillion market cap. Little perspective, folks. That's bigger than the entire German equity market or the UK economy. Just unbelievable. We did have some news overnight about the Nikkei reporting that the tech giant told suppliers to speed up iPhone output. And then, of course, we got that legal ruling that was certainly in Apple's favor. DocuSign, just want to mention, top of the NASDAQ 100, up about 11%, still down about 30% so far this year. CEO being a bottom feeder. The company's CEO bought 4.85 million shares, $4.85 million worth of shares, according to SEC filing. Got that information last night.
And when you say bottom feeder, I assume you're referring to that 42% plunge that we saw last Friday.
Exactly. It's unbelievable. Stock down actually 50% from that 9.3 high. So we've really seen a pullback in that one.
Hey, guys, real quick on Apple. I'm old enough to remember when this wasn't even a $1 trillion company or when it hit $1 trillion.
How old are you?
How old are you, Tim? You're like 22, right?
Yeah, of course, definitely.
He looks really young, doesn't he?
I was around when, I remember when Steve Jobs unveiled the iMac. So, that was a long time ago.
Wow, you are older than we thought.
I'm older than you think. Okay, let's talk a little bit about those decliners. NXP Semiconductor finished the day down by 4.5%. Shares fell as much as 7.5% after UBS put a new sell rating. Talked about this one earlier. The concern is that it expects growth at the automotive division at NXP to underperform the auto semis market. Price target of $170. Keep in mind, though, coming off a record close, it's up about 40% so far this year. Stitch Fix plunging today, down close to 24%. At least two firms downgraded the stock after we saw consumer additions late yesterday disappoint. First quarter results gave an outlook that was seen as weak. The average price target dropped to about $26, down from $45 over the weekend. Shares trading at $19.
Can I just interject here, since you're talking about Stitch Fix? We are getting Rent the Runway earnings. They're also sort of missing here on the guidance that the street was looking for here. And I wonder, I know they're kind of slightly different, but still sort of in the same space here. And I'm wondering whether this has something to do with the reopening trade or maybe some of the momentum coming out of it.
No, it's a really good point, Romain. Rent the runway. Let's go through the numbers first of all. As you mentioned, the fourth quarter outlook is what's really kind of freaking people out. Fourth quarter revenue, $62.8 million to $63.3 million. The estimate on the street is $66.2 million. Stock for you radio folks, down 2.6% in the after hour. This stock is down more than 40% since its IPO. So this is the first quarter as a publicly held company. But what's interesting, Romain, you've really hit something. They've been struggling because of the pandemic, the stay-at-home, work from home. You don't need as many clothes. You don't need as many bow ties. And so as a result, that's been a difficult thing for them.
You can't get bow ties on Rent the Runway. It's a problem.
Well, maybe that is part of the problem.
Yeah, well, and a lot of people, we know a lot of people, at least anecdotally, use it for bigger events. You're going somewhere and you need a nice dress or some other sort of nice clothing. It's sort of a good way to do that. And, we've seen some of these events start to sort of bubble back up, but then we see them get tamped down a little bit here as folks start to say, well, maybe we're opening a little bit too fast here.
Yeah, exactly. And we're certainly seeing some disappointment in the after hours.
And they go back inside
should we
and
talk
play
about
video games,
Should we talk about GameStop? Let's do that.
Let's do it. Looking at shares of GameStop, of course, third quarter net sales, $1.3 billion. That's a little bit of an improvement. Analysts were estimating about a $1.19 billion. So you're getting a little bit of an improvement on net sales. We go to the bottom line and take a look at this. Third quarter adjusted loss per share of $1.39, and that is worse than an expected loss per share of 52 cents. You're beating on the top line, but not quite seeing that improvement down to the bottom line as that third quarter adjusted loss per share, Romain, coming in, more than double what was expected.
I'm just curious what the strategy is. I mean, we spoke so much.
That's what investors want to know.
That's what we care about. Is there a real turnaround for this story, you guys?
Well, it's not a whole lot of detail on that turnaround, especially not in the release right now, but we do see them talk to how they're trying to mitigate.
Well, not in the release. Do you remember the last conference call they had?
The last three
they were literally there for like 2 minutes. They were like, yo, great quarter, guys.
It's 5 bullet points for the release.
Oh, come on.
Yeah,
listen, people want this big e-commerce transition for GameStop, but at the end of the day, they are still brick and mortar, and they are talking about that a lot when it comes to.
They want that, but Tim, don't they also want I guess some guidance really as to how they're going to do it.
Yeah, they want to hear from Ryan Cohen. They want to hear what the strategy is. Bailey Lipschultz at Bloomberg News has a great preview out for today's earnings call, and he points out that in the last 3 quarters they just haven't gotten that. You know, Michael Pachter over at Wedbush, he says that's the only thing that matters: strategy about what Ryan Cohen's doing. How's he going to chewify GameStop?
Yeah, we should just point out, just a shameless plug here, we're going to focus on this during what you missed in the 4:30 block there, and we're going to have Rod Altsman, one of the early GameStop investors, on to talk about it.
All right. Well, it's kind of interesting. I mean, this is where, do fundamentals matter, or is it just a retail, trader play? Hey, do want to mention RH, because it's out as well in the after hours. The company raising
What is that? That's the company that makes that gigantic furniture?
formerly known as Restoration Hardware. Yes, it's gigantic and expensive, but it's really fun to walk through their showrooms. Raising their fiscal outlook. We're seeing that in the after hours. And let's just take a look at the stock. It is up 13% here as we speak. It's up 29% going into this in the regular trade year to date.
Cloud couch, I'm told.
Karen Buchanan, our executive producer, says it is
Cloud
all
couch.
the rage.
You can grab a cocktail at the RH downtown.
How long do you have to wait for it?
On their
How long do you have to wait for furniture
You're
if
off the
you order
rails.
it?
If you're paying $10,000 for a couch, I don't think
That couch is $10,000? Wow.
I think you're still waiting.
I don't think you wait.
Okay.
Hand delivered to you.
But you've got a
White
lot of
glove
space to
service.
fill in your home, right, Carol?
Yeah, totally. Yep.
You can put it right next to that 15-foot Christmas tree.
I do indeed. All right, guys, we got to run. We're going to watch these names, though, because RH is certainly rallying in the after hours. We're seeing Rent, though, having some problems.
You
All
look
right.
great, Tim.
That's going to do it for our cross-platform coverage, our market wrap beyond the bell on Bloomberg Radio, Bloomberg TV, and YouTube. We'll see you again, same time, same place on Friday's Eve. We're talking about Thursday.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so really about some earnings in the after hours. Rent the Runway, now down just about 2.2% in the after hours, but a very different story for RH. That stock is rallying up about 11%.
I'm watching GameStop shares jumping around, down about 5.5%. Shares are lower shares are lower on the outlook for the company.
Yeah, exactly.
Wider than expected loss, I should say.
But again, I think such an important point to this one. Is it a fundamental play? Is there something here? Or is it just continue to be a meme stock, a retail investor favorite? I mean, stock's up 821% this year. But can this CEO, can Matt Furling, actually turn it around?
Yeah, quick clarification. GameStop lower on the wider than expected third quarter loss per share.
All right, some good clarification on that. We know Rent down too on some concerns about the outlook there. All right, back to World of National News and Nancy Lyons. Hey, Nance.
Hey, Carol. Lab tests indicate a third dose of Pfizer-BioNTech vaccine neutralizes the Omicron variant. But Pfizer CEO Albert Bourla tells Bloomberg they won't likely know for sure until the end of the year after they've studied real cases.
What really I think will be the final verdict will be the real world data, when we see what happens in the real world. If people that they have the 2 doses are protected, if people that they have the 3 doses are protected or not.
Bourla says their initial findings indicate a third dose increases neutralizing antibodies by 25-fold compared to just 2 doses. He says Pfizer and BioNTech are already working on an Omicron-specific vaccine that could be ready as early as March. House Speaker Nancy Pelosi is expressing optimism about passing President Biden's Build Back Better bill before the holidays.
We feel very confident about what is in Build Back Better. We know what some possibilities are, and it would be my hope that we will have this bill done before the Christmas vacation.
House lawmakers are set to debate tomorrow whether presidential candidates' tax returns should be posted online, if threats to election officials should be tracked, and White House salaries posted on a special website. The proposals are among more than 24 amendments to a wide-ranging ethics and oversight bill. A California advisory group is recommending the state expand its ability to provide abortions to out-of-state residents, maybe even covering the costs if the landmark Roe v. Wade case is overturned. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons, Tim Stenevec, and Carol Masser, live in the Bloomberg Interactive Brokers studio in New York. We got a handful of earnings just in the last few minutes. Let's start with, you're keeping an eye on Restoration Hardware.
Yeah,
Carol.
let's do that, because that one is up about 10.5% in the after hours, and that's after having a pretty decent run so far here in 2021. I'm just pulling up some numbers here on the Bloomberg. That stock, year to date, it was up 29% heading into the earnings. Okay, so what did we get from the company? And this is the big headline that's catching investors' attention. The company raising its fiscal 2021 outlook. Two things I would say when it comes to RH, formerly known as Restoration Hardware. People are focusing and continuing to focus a lot on their homes, and especially as we are back to work, back at home, working from home, hybrid, doing a lot of different things. At the same time, they really play to the higher end. And so we have done how many different stories about those that have done well in this environment, continue to do well, and they have the money to spend, and they're spending it on places like Restoration Hardware.
Okay, so you're watching Restoration Hardware. I'm keeping an eye on GameStop. In the after hours, GameStop down about 4.3%. The company reported wider than expected third quarter loss, that coming in at $1.39. Analysts were expecting 52 cents there. Third quarter net sales beating estimates, 1.3 billion, beating estimates of $1.19 billion. Big thing though, they want to hear from Brian Cohen, the former, the Chewy co-founder, who is transforming this company from a bricks and mortars company into an online company. And any details about the strategy there, something they haven't gotten over the last 3 quarters. Fundamentals.
Can you turn it around? Is there a future?
Well, a lot of investors still think they can.
These are my questions. Rent the Runway, having a tough time in the after hours, but not if you were shorting it. It's down about 5.1%. The company, third quarter revenue beat estimates. Fourth quarter revenue, though, outlook is a miss, and that is certainly what's freaking investors out a little bit. I'm using freaking a lot right now. Maybe I shouldn't. Anyway, it's concerning investors in the after hours. Subscribers ended third quarter with 116,000, almost 117,000 active subscribers. That's a 70% increase year over year. So we watch that number as well, but it's still down in the after hours. You're listening to Bloomberg Business Week on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, and this update brought to you by Witham. Help companies innovate, grow, and stay secure in today's complex world. Visit Witham.com for more. Stocks higher with the S&P securing its biggest three-day rally of the year, up another 14 points today, back above 4,700, 4,701 on the S&P, up 0.3%. The Dow up 35, up 0.1%. NASDAQ up an even 100 points, up 0.6%. 10-year yield 1.52%. Spot gold, little change, 17.83 the ounce. West Texas Intermediate crude up 0.9%, 72.69 a barrel. Rent the Runway reporting third quarter revenue that beat estimates. Its fourth quarter outlook missed. GameStop reported an adjusted loss per share for the third quarter of $1.39. The estimate was for a loss of 52 cents. GameStop after hours down now by 3%. RH, the retailer formerly known as Restoration Hardware, reporting adjusted EPS for the third quarter that beat the average analyst estimate. After hours, RH up now by 11%. Former tech executive Meg Whitman is President Biden's pick to be the U.S. ambassador to Kenya. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really appreciate that. Well, the AI Summit in New York kicked off today. It was in person at the Javits Center. The event digging into the impact of artificial intelligence in business and speaking just a short while ago on how AI can unlock the economic gains of gender equity. And great to be talking with her again is Kartika Roy. She's the CEO and founder of Pipeline Equity. They leverage AI to identify and drive economic gains through gender equity. And she is with us, joining Tim and myself on the phone in New York City. Kartika, good to be talking with you again. How are you?
Likewise. It's wonderful to be here. I'm great. It's great to be in person again and see people.
I know, right? It's just like the first time you do that or the second time, it's just like, oh my God, it feels quote unquote normal. Having said that, tell us about the event a little bit and some of the conversations that you've been having with individuals when it comes to AI in the workplace and gender equity in particular.
Absolutely. So the AI Summit itself is a premier artificial intelligence event. And what I was talking about specifically is digital transformation. One of the things that we know that actually catapulted forward 5 years during COVID-19 last year, and how we can actually use artificial intelligence and digital transformation to catapult our time toward equity, which, as most of us know, gender equity was actually set back during the pandemic.
How do you do that? Because when you use AI, and correct me if I'm wrong here, but AI can be really biased, and it can be biased in a bad way, and it can be biased in a good way, I think it's fair to say. So what are the inputs that you use when it comes to AI to actually leverage change for good?
So what Pipeline does is we actually intercept people decisions. So the decisions that companies make about their people, there's 5 of them, which is internal hiring, pay, performance, potential, and promotion. We get in front of those decisions. So for instance, you submit a pay proposal or write a performance review and save it as a draft. Then it goes through the Pipeline platform to find any inequity. And if we find any, we actually then make recommendations. And those recommendations look like natural language processing that reads through performance reviews to call out any bias phrases, ensuring, for instance, that ratings are equitable. Those are some examples of recommendations that we provide.
What is the inequity that you identify, though?
So it depends. Essentially, kind of if you were to put it in a top-line bucket, it would be undervaluing women in the labor force. So, for instance, we found that 1/3 of all performance reviews contain bias. 4% of the time that actually leads to women receiving lower ratings. And I know that 4% doesn't sound like a lot, but actually modeled out, what that means is that it takes twice as long for women to be promoted into the same role.
Kartika,
so those are some examples, et cetera.
Kartika, there's something I've done for our Bloomberg Media team, and it's actually an event next week that's coming up, and catching up with the Chief Marketing Officer of Union Square Hospitality, talking with others, female entrepreneurs, female-founded firms. And what's interesting is we talked about this whole idea that companies still don't get women and aren't providing the opportunities. Why is that? Like, and they haven't figured out how to get the most out of us. I'm not saying me
That's
personally,
right.
but in general, there's that feeling. Why is that?
So the sort of core issue here is that we have focused, largely companies have focused on fixing women versus fixing the system. And examples of that include things like, teaching women to negotiate, or trying to get them to apply for more jobs, or changing the way that they speak. And the thing about that is that women are broken. The system is broken. So we need to fix the system. That means, and what fixing the system means, is actually ensuring equity within our decisions.
Katika, I'm wondering if you are optimistic to the extent that you think that pipeline equity won't need to exist in our lifetimes.
Well, I don't think I would say that, because we're currently 268 years away from equity in the workforce.
How about that for some context?
Yeah, so, and we added 11 years just in the last year. So I wouldn't say that we won't need it. However, what I will say is this. On average, our customers increase equity by 67% in the first 3 months on the platform. So there's a tremendous opportunity for us right now to catapult our time toward equity. And really quickly, what we've found is that for every 10% increase in equity, there's a 1 to 2% increase in revenue. So it's not only the right thing to do, it's actually a huge and massive economic opportunity.
Yeah, one of the things that we talked about, this event that's coming up next week, and you can find out more on LinkedIn or check out my Twitter feed, but it's also, we're seeing a lot more females create firms, entrepreneurs, because they've just had it with the traditional space.
50%. Well, go ahead.
Well, no, please go ahead.
Well, I was going to say 50% of what I learned recently with the SPACs, 50% of those have women on their boards.
Yeah,
so we're seeing more gender equity, at least when it comes to the new companies that are being created.
Katika, we have to run, but we'll catch up with you real soon. And I'm so glad we could, and I'm so glad to hear that you guys were at an event in person. It's nice to see parts of our world reopen, even if we do so cautiously. Katika Roy, she's Chief Executive Officer. She's the founder of Pipeline Equity. As we mentioned, they are leveraging AI to identify, drive economic gains through gender equity. Really cool stuff on the phone in New York City.
Very cool.
Interesting about SPACs. Well,
yeah, take the SPAC quiz. You can get up Bloomberg
And what
News.
David Rubenstein said about younger people on board.
Yes.
You really got to bring in a diversity of thought to really perform well.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You're listening to Bloomberg Business Week, and earlier today, I hosted a panel at the Bloomberg Sustainable
You were busy
Business
today.
Summit. Yeah, it's been a busy day.
That's been a busy
But it was
day.
a great duo. It was Steve Case, of course, co-founder of AOL, now of Revolution, and David Lee, president of App Harvest. They have invested in App Harvest, so we talked about building a sustainable brand.
I got a little bit of a sneak preview. I saw some of it on Twitter.
Oh, you did?
I did, yeah. But
Love
I'll
that
still
social
listen.
media
Don't
thing.
worry. I'll still listen. Hey, let's get to a check of the trading day and how things ended up. Lots of earnings, Charlie Bell.
Indeed, you've got earnings. So we've got Rent the Runway slipping in late trading after reporting a revenue projection that fell short of estimates in its first quarterly earnings since going public, showing that investors remain skeptical of growth at the fashion subscription company. Shares lower after hours, down by about 5%. RH reported adjusted EPS for the third quarter that beat the average analyst estimate. Shares up by 12%. GameStop reported a fiscal third quarter loss that was wider than analysts expected as investors await word about how the struggling retailer intends to reshape its operations and lure gamers back. After hours, GameStop down now by 5.5%. And Citigroup is seeing the end of the pandemic-induced trading craziness. CFO Mark Mason says fourth quarter trading revenue will likely be flat to modestly down. Turned out to be another up day for the S&P 500 index, with the Dow, the S&P, NASDAQ all advancing today. Equities rose with the biggest three-day rally of the year. S&P up 14, higher by about 0.3%. The Dow Jones Industrial Average up 35, higher by about 0.1%. And NASDAQ was up 100 points for the NASDAQ Composite Index. That was a gain today of just about 0.6%. 10-year yield, 1.52%. Spot gold down 0.1%, 17.83 the ounce. And West Texas Intermediate crude up 0.9%, 72.68 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I mentioned the Sustainable Business Summit happening here at Bloomberg. I caught up with Steve Case, Chairman and CEO of Revolution, also co-founder of America Online, and David Lee, who's president and board member of App Harvest. Steve Case and Revolution investing in App Harvest. We talked about a lot of things, in particular, building a sustainable brand. Here, they talked about the evolution of sustainable investing.
I think the broad trend in the last decade in terms of the growth and interest in sustainability in the last several years, a real acceleration of investment in ESG, I think bodes really well. I think the perception 10 or 15 years ago was this is sort of a good thing to do, but wasn't necessarily a profitable thing to do. That's clearly changed. Some of the most valuable companies now being created are focused on sustainability. App Harvest obviously being one. We also backed Sweet Green, recently went public with a very, very strong focus on sustainability and even a board committee focused on ESG. We also backed Temper Pack, which is trying to focus on sustainable packaging, rid the world of styrofoam, which is terrible for the environment, by using a better packaging. And a lot of big food companies like HelloFresh and Daily Harvest use it, as well as pharma companies. So it's identifying problems out there that need new solutions that are good business opportunities while also being much more sustainable in terms of what they're doing and the impact it will have on the planet. I think there's a rush to focus on these from the entrepreneurial sector, a rush to invest in these from obviously the investor sector, but also a rush from a customer standpoint, a consumer standpoint. They really want to do business with companies that care about the world and care about the planet and have a strategy and a real commitment to sustainability.
Are we being smart enough as an investment base, Steve, to give companies time? App Harvest, you went public this year. It's been, I would say, a volatile IPO market. We need to be more sustainable as a world, right? Otherwise, there ain't going to be anything left. So are we understanding enough? Are we sophisticated enough as investors to understand that there's got to be a balance to let these companies grow, to make their investments, and maybe at the risk of short-term financial performance, but longer term, this makes sense because it's got to be where the world goes.
Yeah, every company is a little bit different, but you have to figure out what your time horizon is and make sure you're educating investors, whether you're a private company or a public company, on that. Sweetgreen, which started 14 years ago, has done that, and it built up a significant business that's scaling quite nicely. AppHarvest started just 4 years ago, as I mentioned, and was able to go public and access the capital markets to dramatically expand what they're doing on the production side with new facilities, not just the initial one in Eastern Kentucky, but many others, and also invest heavily in technology, particularly robotic technology. So they were able to use that capital, and they educated the market at the time they went public that this really is something that will build significantly over the next decade. But we need access to the capital markets to be able to execute an ambitious plan to really build AppHarvest as a company and build it as a brand. And that's the path they're on right now.
David, what is it like the conversations you're having with investors like Steve, with others, now that you're public, a public company, in terms of what they want to see, what kind of transparency they want to see, though, to understand, hey, this is a true sustainable investment?
Well, one of the hallmarks, I think, in being public when you're interested in large global impact is every day you are educating the public investor. Every quarter, you have radical transparency, not just to what your financial results are, but frankly, the commitment we have to sustainability. We have a high bar because we have gone to investors that are the most sophisticated in the world. With that access and capital comes the chance for us to radically speed up how many of these large technology-enabled greenhouses we can produce. For perspective, our first farm in Eastern Kentucky is 2.8 million square feet, right? It has a water reservoir that allows us to use 90% less water, but that water reservoir is something like 50 Olympic swimming pools large. So the scale of the impact that, frankly, we need as a community means that we have to bear the radical bright light of being public. It has a great benefit, but companies have to be prepared every day, every quarter, to be scrutinized. And that is different than when a lot of these companies only could access the private capital markets. It is a great opportunity, but it has a real burden and cost to the team to make sure that they can operate to the rigor of the public markets.
All right, that voice, David Lee, president and board member of AppHarvest. He's the former CFO of Impossible Foods and Zynga. Definitely familiar to our listeners. We've talked with him before. And Steve Case was with him, chairman and CEO of Revolution, of course, also co-founder of America Online. Revolution, Steve Case, they invested through one of their 3 funds in AppHarvest before the company went public. And of course, it went public this year. And it's been a tough market. But it was really interesting, the conversation. And we talked about kind of finance, balancing a company that's an innovator, a disruptor. It might take some while for it to take off. And how do you balance that with, a good mission that they're doing, but also their financial performances, especially since once it becomes public.
Yeah.
And bottom line is you got to maybe be a little patient. It's going to take a little while.
You have to communicate that to investors because they need to be patient.
But think about Amazon, right?
Yeah.
In terms of as it was innovating and disrupting, for a long time, its financial performance was there until it really was there in a big way.
Well, let's head to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by in our 99.1 studio. Hey, Nance.
Thanks, Jim. President Biden says he warned Russian President Vladimir Putin not to invade Ukraine. The leaders had a roughly 2-hour video conversation yesterday. Talking with reporters at the White House today, Biden said he is absolutely confident that Putin got the message.
The meeting with Putin, I was very straightforward. There were no minced words. It was polite, but I made it very clear. If, in fact, he invades Ukraine, there will be severe consequences.
Biden says the U.S. will continue helping Ukraine boost its military capacity, and he wants help bring down the temperature between Russia and Ukraine. Russia has been amassing troops on the border with Ukraine. Pfizer CEO Albert Bourla tells Bloomberg initial lab studies show a 3rd dose of their COVID-19 vaccine may be needed to neutralize the Omicron variant.
3 doses of the Pfizer-BioNTech vaccine will provide for Omicron the same protection like the first 2 doses provided for the initial strain.
Bourla says they found a 25-fold increase in neutralizing antibodies in those who received a booster compared with those just receiving the first 2 shots. He says an Omicron-targeted Pfizer shot might be ultimately needed. That could be ready by March. Convicted killer Scott Peterson has been resentenced to life in prison without the possibility of parole. That sentence is for the murder of his pregnant wife, Lacey, and their unborn son. He was awaiting a possible execution until his death sentence was overturned due to technical issues. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nan, thank you so much. Sorry, it was a little bit of yawn.
It's a good stretch.
Not because of Nancy, just because I'm tired.
Well, we got some good program left.
We got me some good program.
Yeah,
Is that what you're saying?
We do. We got 19 minutes.
We got some knee shortages too when it comes to chips.
I know. Hey, I thought things were getting better. Well, let's talk about this latest from Ian King. Delivery times, he writes, for chips.
I love anything and everything that Ian King writes.
And look, there's a good reason.
He's so smart.
Yeah, there's probably nobody around us who knows more about chips than
He's been doing
Ian
it for a long
King.
time.
He says that delivery times for chips lengthened again in November, those dashing some hopes that the end of shortages that have hammered many industries is finally in sight. Because we have been hearing from companies in recent weeks that things are getting a little better, at least when it comes to some parts of the supply chain. But with chips, that wait time lengthened again.
Yeah, lead times closely watched gap between when a semiconductor is ordered and when it's delivered increased by 4 days to about 22.3 weeks last month compared with October. What?
22. That's over 5 months.
That's a long time.
That is a long time.
That's research from Susquehanna Financial Group. The lag marks the longest wait time since the firm began tracking data back in 2017. Chips and everything. It's interesting, too, because we've been talking a lot about chip stocks because we have seen a tremendous rally in those chip names, up almost 42% so far this year. And I think we've even seen more recently a tick up from those October lows.
Yeah, the results are a setback for industries that need more of the electronic components. At this point, Carol, that's pretty much everything. Companies from Apple to Ford have complained that they can't meet rising demand for their own products, and their costs are rising too. October's more muted increase, that had fueled some optimism that the situation was improving.
Well, and as I said, all of that demand that's out there has certainly been a boon to those chip makers, and that's evidence that we are seeing certainly in their share prices. What's interesting, though, is there's a point where if you can't meet demand, does supply slow down? And you know what I mean? Like, how that kind of slows down productions, and ultimately, although what we've seen is a lot of people who've got the products may be able to hike their prices.
You talked about the performance of chip stocks. These SOX, the Philadelphia Semiconductor Index, up more than 40% this year, beating the S&P 500.
Yeah, big bump up, as I mentioned, from that October low. You're listening to Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a headline from the Bloomberg Professional Service. The Warren Buffett-backed Nubank said to be pricing its IPO at $9 a share. Lots of earnings after the bell. GameStop reporting a fiscal third quarter loss that was wider than analysts expected. Right now, we do have shares lower after hours, down now by 5.8%. Also reporting after the closing bell, RH, the retailer, up 11.3%. Rent the Runway slipping in late trading. It is down now by about 5%. It was an up day on Wall Street with the Dow, the S&P, NASDAQ all higher. Stocks resumed the rally for a third day with the S&P up 14, up by about 0.3%. The Dow up 35, up 0.1. NASDAQ up 100, a gain of 0.6%. 10-year yield, 1.52%. 10-year down 15/32. Gold down $1.35 the ounce at $17.82. A drop there of 0.1%. West Texas Intermediate crude up 0.9%, $72.73 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you. You're listening to Bloomberg Business Week. So you might recall last week we talked a little bit about this. When it comes to the billionaire economy, there was a Bloomberg story, a recent one that talked about the billionaire economy booming. Demand, Tim, for super yachts, mansions, and planes soaring, driven by cheap debt and rising wealth overall.
A lot of people want to fly privately, and a lot of people want to get on those yachts. Well, Greg Brunson-Pitts is founder and CEO of Advanced Aviation. We're going to talk private aviation with him. He joins us on the phone from Arlington, Virginia. Greg, great to have you with us. How are you?
I'm doing well, Tim. How are you?
Doing pretty well. So piggyback on what Carol was talking about. I mean, just give us an idea for how in demand private aviation has been over the last 18 months.
Sure. Yeah, thanks for having me. Demand is high. Yeah, people really want to fly, and they're willing to pay for it. We are seeing planes really moving really across the industry and all sizes to all sorts of destinations.
All right, so you say demand is high. We're Bloomberg, we're wonky, we're nerdy. We like numbers, we like context. So are you talking about demand being above pre-pandemic levels? Give us some context, if you would.
Yeah, that's a great question. So we're starting to see demand above pre-pandemic levels, which is really crazy because demand was high in our industry before the pandemic. In 2019, we were really starting to see strong demand in our industry. And then when the pandemic hit, things really slowed down during the shutdown in the summer of 2020. It really became, private aviation became something that was used by governments to move people and move goods and services kind of around the country. It became kind of like an essential service. And then it really transitioned. Families were moving elderly parents and people were using it to get to their vacation homes and then to get to warm weather. And so demand has really just gone back up above where we were pre-pandemic in 2019.
Well, that's what I was curious too about demographics, like who is using it. How has that changed and played into maybe increased demand and potentially demand being above those pre-pandemic levels? So I'm curious if you've got new people who have never used private aviation that did it maybe during the pandemic or saying, I'm going to stick with it.
Yes. The short answer is yes. So what we're seeing are some of our traditional clients took a break from it during the pandemic. So, people who gave speeches or maybe were going out on road shows and things like that had to take a break. But some new clients came off the sidelines who had maybe given private aviation a look before and considered it for their family or for their business, now view it as something that is really an essential thing that they want to do. It may be if it's just a few times a year, or for a business, maybe it's something that they want to invest in and use regularly.
Well, Tim wants a plane to go skiing next year. So give us an idea of what we can get, how much it costs, how it all works.
It's very subjective. There are a lot of variables.
50.
50, yeah. And that's an estimate. Once we get actual aircraft availability and note the dates, because dates really do drive charter prices, because it does fluctuate based on if it's a holiday and if it's a weekend or what else is going on. Things like the Super Bowl, the Kentucky Derby, all of those types of events really do drive charter availability and charter prices.
Hey, Greg, one of the things we're wondering, we're talking about the hospitality, the hotel industry, but more specifically the business traveler. We were talking a little bit about that with David Rubenstein earlier, and he said that maybe he's not so quick to get on a plane anymore. What are you seeing in terms of business or corporate travel in particular? And give us some context there.
Sure, it is starting to pick back up, and conventions are back and conferences are back, and I think a lot of businesses are looking to our industry and using aircraft in a way to move around people where they might not have been before. People really do want to get back out there and be together again. And if they can, in an economical way, use a charter for their business, I think they're looking to us as a solution.
Well, help us understand more when it comes to demographics. Carol asked about this, but I'm also wondering, what's a typical net worth of somebody you're seeing now who's using this more recreationally than you were seeing before the pandemic? Has that shifted at all?
Yeah, so we get inquiries from people all the time. I mean, typically, for someone to charter an aircraft, we'd be looking at someone with a net worth of around $5 million. But that doesn't mean that is a hard and fast barrier. We could do, someone could do a small trip, for a 1-hour flight on a King Air. And that's an experience we can create for them because we are a charter broker. So we have access to all different size aircraft, and for all different budgets. So we can really do anything.
Hey, before we go, we just got about 45, 50 seconds. You were the director of White House Travel back in 2003. What was that experience like?
It was exhilarating, exhausting. It was an honor. I got to work with people who were really at the top of their career and really learn a lot. I worked with senior White House staff and the White House press corps all at the same time, and so I loved that job. I mean, I love this job and owning my company, but I also really loved that job. So.
All right. Well, cool to get some time with you. Good luck for the holiday season, and definitely do stay safe. That was Greg Brunson-Pitts, founder and CEO of the private jet charter broker Advanced Aviation, joining us on the phone.
Okay. Well,
you ready to book?
50K. I think I can get a few more days of skiing
honey?
in. Yeah.
What's this Amex bill?
Exactly.
I think
Amex would call me before that charge cleared.
But it's interesting to say that those demand, getting to pre-pandemic levels.
We hear it everywhere.
We really do. All right, everybody, that's going to do it for this Wednesday. For Tim Stanovic, I'm Carol Massar. Have a great evening.